check. Mic check. 1, 2, 3. Vocals look good. All right, let's go. All right, everybody, we're coming in a little bit earlier today. We saw a bit of yesterday. We saw a little bit of had a couple of issues throughout the day, so we weren't able to do as much throughout the day. So came in a little bit earlier to see if there's any price action occurring. We saw some London movement so far, and let's take a look and see what we can find out in New York Open as we just started here. So today we've got CB consumer confidence and existing home sales at 10 o'clock, crude oil inventories as well, 10:30, and then Fed member speaking at 12. So I will be here for the morning, but I will not be here in the afternoon as I have to, or late morning, as I have to hop into a few calls. So we'll get started as best we can today, and then I'll go off screen and handle a couple of work things that I have to handle. So let's take a look at the charts. All right. Get this over here. All right, so on the daily, we've obviously, yesterday we were correct. I know there's a lot of people that hopped into the chat saying we were going short, but the overall direction was still to the upside. Now, one key piece of information now is that we see that we've moved over into this short-term lows, the sell side already, and London had a drop from 1740 down to 16,970 right now. So as you can see in our Asia range, we'll say it's roughly there. I don't know if I saved a template for this or not. Probably not. Guess not. So let me see if I saved a template like this. Does not look like I did. Oh, there it is. There it is. Yeah. Okay, there you go. I don't need this. A very light template here. So looking at Asia's high and low, we actually had no movement. And this is interesting. Let me take a look on the lower time frame, but we had no movement above Asia range. Now that is interesting. The open at midnight is 17:041 exact. And so we have that the rest of the day, and then we have Asia's low over here. London got to a high of 17:046, which was also the high here. So we've created relative equal highs now. Hi, Delphine. I'm good. I'm good. Got a little bit of rest and took care of a couple of things yesterday. So I think today, much better. I wish I could trade the whole day, but there's a couple of things I still have to take care of. So we'll see if we can find, we'll see what kind of a setup we can find. Today we had quite a drop during London, the London kill zone, as you can see here. And yeah, this drop is quite interesting because we are starting to see some movement lower. Whether this constitutes market structure shift, I don't know yet, but on the grand scheme of things, it's not the biggest drop that we've seen. It is the most prominent one that we've seen so far. So I'm wondering, do we end up taking, and I can get rid of these. Actually, I can reuse this now and put this at 17046. 17046. Hope you're doing well too, Delphine. Let's look at dollar. Let me pull up trading view. Let's take a look over at dollar. It's been a little minute since I've looked at this here. So dollar on the weekly's headed lower. On the daily, we dropped and are consolidating. On the 4-hour, we had dollar jump in London, but solely to take out this imbalance here. Came down into this buy side imbalance and then some. Came down to this bullish order block and has come back up from there on the 4-hour chart. So there's definitely, if I take a look at this monthly chart here real quick. So we have a previous month's low that we're approaching on the dollar. I don't know. Let me look at the weekly here because there's a weekly gap down below us. I don't think that we're done heading lower, at least not until December. But there is potential for us to head up into this bearish order block on the dollar. If we head upwards, that means indices down. I don't know if it's the time for that yet, but I would prefer us to reject this monthly low. Yeah. So dollar, yeah, it looks like we're in a consolidation area. But key thing to note is that we haven't finished this market maker sell model just yet. We don't have to go all the way, but this consolidation, in my mind, is likely more a consolidation prior to continuation lower into this weekly fair value gap here. There is outstanding liquidity to be taken further down. On the weekly, you can clearly see there's still outstanding liquidity down here, but in the short term, we could definitely see us head upwards, but I'd like for us to reject that monthly level, if at all possible. But yeah, if it's a balanced price range, we could see a little pop up, which would in turn mean equities, of course, head lower. And thinking about time of year, we're at the end of the month. I think we get some people starting to sell into these highs. I don't think that's like difficult to see that we've gone up so much, and we're starting to see a little bit of sells come into play. Now this sell is relative to this last sell, it is a little bit larger, but it's not as large as the one as the ones earlier preceding it. So we have some pretty decent sells before. So we will continue taking a look at what could be our draw. So let's take a look at this, right? So on the daily chart, we can clearly see that we've got a SIBI with a low here, 1770.75. And we've only hit a high of 1750 here. So, do we have a fair value gap below us? Yes, we do. We have this segment, which hasn't been traded to yet. Below us, we have quite a few fair value gaps, taking us all the way back down to the mitigation block. And on this daily range, currently, equilibrium would take us down just to that mitigation block down here. So it'll be interesting to see if we find support at this bullish order block here. There is a little fair value gap here that we could potentially trade off of. Let's look at the 4-hour chart. So yesterday, I know there were some people crying wolf who were thinking, oh, the long was the wrong move, and in fact was the correct move. And we would have seen that, we would have been able to see that, seeing that how our 4-hour candle dropped down into this bullish order block, and we've supported it here. So we do see in London that we've traded past a lot to get back down into this bullish order block. Now we do have a 4-hour, there's a 4-hour gap right here. Let me expand this so you can see this. So there's a 4-hour fair value gap down here that we've not traded to, and that's within the bullish order block itself. So that is something to consider. I'm also watching right now as well. I see consolidation on the lower time frames. Let's move down to the lower time frame charts. I'm starting to see some movement here. Why is this chart different though? Oh, I'm looking at the wrong chart. So the 1-minute chart's what I want to look at. So I want to see if this serves us here. Low, high, lower, low, higher, high. But it's not a major displacement high just yet. So let's take a look at this. I want to see how price reacts at that volume imbalance. I want to see us go lower than that, but I want to see how price reacts there, because this is a breaker that we're also inside here. And honestly, there's probably even a smaller breaker there. But this isn't enough displacement to be considered anything to be considered movement higher, but we do see some movement higher. I want to see a little retracement back to there if possible, but we will begin a starter position, and then we'll add to it as it comes back down into that zone here. We'll keep our stop will be below this fair value gap low. And so I expect this to head back down here. So I'll layer in a couple more longs, one more. Oops, no, not two. I don't want to buy two. I want to keep it the lowest leverage possible. And we want to enter here and here as well. So we'll let price come down to those and get our entries there. If we come down and come down and take these out, then yeah, that's fine. We entered a little too early then, but that's okay. So either way, our stop is below this fair value gap down here. We can see that we've traded down into and balanced out some of these longs here each and every time. So we'll see. We want to test the waters and see, are we going to continue to consolidate and then head lower? Are we going to, based on what Delphine you had mentioned, are we going to temporarily see a bump up higher in dollar? And will we head up to take out that dollar volume imbalance that's on the daily chart? This volume imbalance here, will we come up into this? So because this is a bearish breaker here as well, so we have a low, high, displacement lower. We could come into this segment here, and that volume imbalance would be the ideal place for us to head up to as well. Now it's a breaker, but it's also in a heavy discount, or not heavy discount, but it's like right around equilibrium. So we could see it. A new day opening gap. Let's see. Do we have a new day opening gap? $16, $17, $18. So new day opening gap would mean that we see a jump from 1700 to 1801. 1700 close is 17026, 1801 open is 17023. I mean, there's a little new day opening gap there, but not much. Okay, so fair value gap got tagged there. Oh, on dollar. Okay, I see what you're talking about. I see. $13.12. Let's take a look at dollar. Yeah, I see what you're talking about. Right here. If I can get this right. So this is the gap that you're pointing out here. That's a pretty nice big liquidity gap there. We traded down into it, what, about 50%? You'd say a little bit more than 50%, and we've been creeping up since then. We can certainly head back down to that, which would be bullish indices, but right now, this run up, let's see how this run up plays out first, because we could still creep up here before we target that new day opening gap. But that's a good eye, Delphine. Really good eye there. That's a liquidity void. So if we don't see any mitigation, any reaction at some of those mitigation blocks, below us. Like, we don't see any reaction when we hit down to the previous highs like here, then we could trade lower. But there's a lot of stuff to get through here. There's let me see if there's any breakers here. Not yet. So there's definitely some mitigation blocks here. So I would be curious if we can get past 102.334 if we head lower. But you're right. Like, if we get a massive move lower, then yeah, we could potentially see this targeted. Good eye. Good eye, Delphine. Okay, so far, let's take a look at our targets here. Let's see. Looking on the 15-minute, one thing that I do see here is a inversion fair value gap. So we want to mark that. So we might want to target that area. There's a bearish order block below us. We can keep our stop, can be combined here, hopefully. And we can now de-risk. We don't have to de-risk though. Let me see. So we don't want to necessarily move up just yet because we could trade back down to that order block. But we are seeing prices start to head upwards. So we can leave our stops as is for the time being. And then see how we react at that volume imbalance. Coupled with the order block on the 15 minutes. Let's see. So on the 15-minute, let's see, we have this gap coupled with a order block here, a bullish order block here. Yeah. I could see that. Yeah, I could see that happen. 30-minute, a little bit clearer there. We have a liquidity void there, bullish order block right there. We traded down into it already. So there is outstanding liquidity there, and we are heading higher. So prices we should be seeing prices head lower on here. But I guess we can de-risk one of these accounts here just in case. We'll de-risk there because dollar is reaching higher first. And we could get stopped out here. It could just like come down, take this out, and then head higher. Very, very good possibility of us having that happen. Which in that case we can lower one of these, I guess. But you know what? Let's just leave it there for the time being. If it gets stopped out, it gets stopped out. But we're looking at dollar, and we can see that it's heading higher still into this mitigation block area. I do think that I might have trailed my stops a little too high, so let me move them down back into a reasonable range. Oops. They have to be trailed below this fair value gap here. Otherwise, they have the possibility of being tagged. I'm going to keep this sell limit. The first sell limit I'm going to have at the bearish order block on the 5-minute. So you'll see that this level here, this low is 17,002. So we're going to keep our first target around that area. And then and let's actually project out as well. Let's do a little projection to see if we can get this here. All right, low, high. So 350 would put us right around there as well. There we go. All right, 350 levels right at 17,002. 450 level would be at 17,008. So we'll keep those levels there. We see price came down, is coming back down to take in this fair value gap there. So we see how price has come down, picked up some more orders, and we'll see how it trades around this area here. We see this fair value gap coupled with this bullish order block here. So we'll see if this holds here. Oh, on NASDAQ, the 15-minute on NASDAQ, I see. On the 15-minute here, at the new day opening gap area, I don't see a bullish order block there. Maybe this one? But I'm looking at the 1700 to 1815 range. Let me take a look real quick to make sure. So here's where I might add another one. Price isn't moving quickly enough for me to feel comfortable adding another one here. But that's what I would like to do. Right as we hit this bullish order block here. I'd like to add one more right as we hit that bullish order block on the 1-minute. We might not get there. We might only hit the mitigation block there, but let's see. All right, we got a limit order. We got taken, heading back down into that breaker. And we can, let's see, one buy side imbalance, bearish breaker. If we head much lower than that short-term low here, then I'd probably give it at most movement down into this fair value gap here. And we would manage our stops by putting our stops below the mean threshold of that bullish order block. Ja Digital, good morning. Good morning. Hope you're doing well. We're just looking at some price action in the morning here because we have a couple of commitments in the afternoon that we won't be able to stay online for. Dollar continues to creep up, but one thing to note on the dollar over here. So dollar is reaching a consolidation zone here and a SIBI on the hourly. So we'll see if it does seem like, you know, it's having a tough time heading lower. So that doesn't bode well for longs. In fact, if I don't see this react any further, I might have to get stopped out of some of these positions here. But for now, we'll keep it here. We're looking to see if we see a reaction at this range. We're looking to see if we see continuation to the downside here. But 4-hour chart, potentially could see us consolidate further. We have seen some movement here higher first, so drop it lower. So because we've seen this type of displacement, I like this as a mitigation block even better. So, oh, looks like wait, we got taken out there. We increased our stop a little too much, apparently. So we're gonna re-enter on the movement down into that that fair value gap there. Wait a second, what happened here? Oh, oops, I'm on the wrong account. There we go. So we got taken out there. That's fine. We were on the wrong side there. So with dollar rising up, we haven't seen it come to terminus just yet, but we can kind of take a look and see. We're not seeing super big strength to the upside yet, so we're keeping an eye on this range, of course. Let's see. Swing low to swing high. This would be roughly where we could potentially head higher. So I'll re-enter one contract. We could head lower as well into optimal trade entry, but that's why I'm gonna go with one contract for now. If we do head lower though, you can kind of see that we don't have a ton of like energy to the upside. Like even though we're in this little bit of a range, we don't see. I mean, yes, this is a slight shift to the upside, and yes, we didn't get below this low down here. So, I mean, we can afford one contract here. We'll keep the low. Our stop will keep below this here. And if we head lower, actually, we'll keep our stop around here. And we will add one if we head down to here. Okay. So keeping a close eye on dollar, because what I don't want to see is us completely barrel through this rest of the SIBI here, head higher towards these relative equal highs, and then continue higher into this range. I would not want to see that if I'm long. I would love to see that if I'm short. So depending on your play, depending on what you see, you could be short off of this, and you probably would be making some pretty good cash from that rundown. All right. So I think that's it for now. I have to go take care of a couple of things, but we'll see how price will either drop down heavily and we'll take our stop out here, and then we'll look to see if dollar is, truly continuing lower, which oftentimes New York session does have price follow London, then we likely could aim for that 16,911. That could be a possibility. Yeah. Um, so let's draw this. Sixteen nine 11. So while our draw on liquidity is still higher, if dollar continues to rise, then we might have to reconsider, as none of these right now, this PD array is being so far being respected here. What is this low? 17,002. So if London does continue, then we'll see us stopped out, and you'll start to see signatures of lower lows occurring. Okay. And let me see one thing here. Technically, we should take one contract off here at the 100 mark. That would be the safe mode. And then probably another one off at 06 would be fine. Around there. Actually, we could even go down to the 200 mark, yeah. Okay, so I think for now what we will do is, because we saw support at this area, we'll go ahead and move our stop to just below that fair value gap there, because if it drops below that, it's going to go lower, and we'll let this trade either pan out or stop us out lower. We can see that there's quite a bit lower here, so we can see that we might move up. But yeah, let me go take care of some stuff here, and then I'll be back in a little bit for New York Open. All right, be back in a little bit. All right, I'm back. So it looks like we got our stops taken out and prices have returned 20 or about 8 handles from where we entered. Not a big deal. We do see that dollar hit exactly that mitigation block and mitigated basically. So it's funny how you see those confluences there. So um yeah, we probably just needed to wait just a little bit longer. I think maybe entering and setting our stop below the bullish order block on the lower time frame would have been helpful. We have news embargo in about 42 seconds that we'll keep our eyes out for to see what might happen here. Keeping my eye out here for the next few seconds, 20 seconds. About 15 seconds here. This is all just consolidation. There's nothing really. We need to see what happens here. All right, so news gets released here. News is starting to get into the market. Is there anything happening here? Dollar is rejected off of that mitigation block. Enter our trade. Oh, that was a poor entry. Now that I think about it, I'm gonna close this once I get a shot here. If I get a shot. That's what you get for entering poorly. Should have waited for a sell side to be taken first. Looking at dollar, it is lowering. I think maybe entering here might serve a little bit better. All right, dollar still is heading down. If it continues like I expect, then we should be aiming for, as Delphine pointed out earlier this morning, that new day opening gap on the dollar. If we reach down towards that, we could see our prices head up to that inversion fair value gap down there. That's what we're kind of banking. That's what play we're looking at right this moment, at least. But there's no evidence of it. Currently, there's nothing happening. 8:30 a.m. supposedly we would get housing starts, so we should have seen a little bit of volatility there, but as you can see, we didn't really get much. Actually, no, today's Wednesday, sorry. CB Consumer Confidence. We had current account at 8:30. CB Consumer Confidence is at 10 a.m. So, yeah. Oil is doing some weird stuff. Dollar is bouncing right now, so I'm gonna... I might choke up my stop here. I know it's probably not the right stop management technique, but with dollar bouncing off of that, there's no guarantee that it'll continue to drop. So we get stopped out, we get stopped out. Take a look at oil. Oil came down into a bullish order block and has continued onward. And it came down into a buy side liquidity as well. Previous short-term high. And treated that like a mitigation block. So we're seeing signatures to the upside. Let me see what this level is here. IS 7504. And we're right around that peak there. So 7504 was a previous short-term high. Okay. And we're approaching that as well. Okay, it looks like our trade, we traded back down into this bullish breaker. Let's ride that out to 10 a.m. So we traded back into that breaker, and we've now since seen us break upwards. We don't know how sustained this is. Dollar is bouncing a bit, so we're cognizant of that. No major runs yet. Antonio, good morning. Good morning. And of course, Stock Trader, good morning. So while we're watching price do its thing this morning, I am going to be, I'm looking and watching oil as well. I want to see what we might run for today. We're in a market maker buy model now for oil. Basically, we came down and filled out a bullish order block there for the month. The week came down into a weekly imbalance and has since risen quite a bit. Daily reached down below but closed below the weekly imbalance and now has traded to and through. So I think oil is on its way back up. Need to see what this was. Is this a weekly? That was a weekly volume imbalance. Let me see something here. One week. Volume imbalance. So I think oil is going to be headed up there today. What have we got going on here? Dollar remains its movement now. It's at a really key point here. It does look like it's bouncing briefly off of a bullish order block there. Not necessarily a bullish order block. There's one below it, but we need to see dollar drop out pretty much. Admittedly, our stop has risen up quite a bit. It can get taken out before the next run, but I'm keeping it there for the time being, just because I can't watch it very closely right now. Dollar continues to drop. That's good. We like that. Okay. Stop is the mean threshold of this breaker. Dollar is continuing to drop for now. Kind of want to take my first profit at 10 handles just to take this out there, basically. Let's see if we can get above that rejection block. Dollar's approaching a bullish order block, but there's no high probability. It's not a high probability bullish order block. Maybe we'll keep it up here. 66, 7, 8, 9, 1, 7, 5. Seven, 5, 76, 77. $5.95. Yeah, we'll just leave it for the time being. If it goes up there, it goes up there. Oil, we'll wait. See if there's a run up. Weekly draw is up to the volume imbalance there. Weekly volume imbalance is still in play. No gaps below us, except for one really far down there. 4-hour chart, what do we have here? Okay. If dollar falls, NQ rises. Mandagas as. Generally, the markets are correlated inversely, but mandagas. One key thing would be I'm going to sell one here. Gosh, I should have kept my profit there. So generally, if the US dollar is weakening, meaning it's lowering, that means currencies begin to get stronger in general. Which means indices also will rise naturally. Let me see if I wanted to put this limit order down here. Let's see. No, I think we'll get up there. But we'll take first profit anyways around, let's see, 75, 76, 77. Sure. We'll take for first profit there. So, yeah, just if you go back and study the correlation between the dollar index and yields, this comes from ICT's lessons on yield, on dollar index, on smart money concepts. You generally see a inverse correlation, but not always, mandagas. Generally, you can use that as a gauge to see if dollar has a draw on liquidity lower, then generally indices will also rise on a lower dollar. And on the inverse of that, and actually do think that I can keep this all the way up here. On the inverse of that, if dollar has movement to be stronger, then it's more expensive for people to trade. So US dollar currency pairs will likely suffer because of it. So dollar up, indices down generally. Dollar down, indices up generally. When you see a crack in correlation there, that means there's where dollar up and market up, dollar down, market down. That's when you have to be a little bit careful because your trends can't really be trusted then. Getting ready to sell one. I don't like this price action here. Let's set a limit at 40. 87. 50. Oil is still hovering around that daily short-term high buy-side liquidity that just got taken. I imagine they drop it first before going, but I mean, we're inside of internal range liquidity right this moment, so I imagine they head up towards that volume imbalance on the weekly on the oil. Definitely taking its time here. Dollar is still lowering, going lower, so that's a good thing. We want to take our first profit around 12.5 handles, 1-to-1 R. Yeah, absolutely, Mandagas. It's a good tool to use as a check, as a potential confluence, but by no means is it a immediately like perfect silver bullet. 900 Antonio, 931 subs, 11 watching, 4 likes, few days before Christmas. Share a little like for Johnny. Yeah. No, I appreciate that. Now I'm regretting not taking profit when it got to 25, but dollar is jumping a little bit here. And we're seeing price come back down a bit. Yeah, drop me a like. It helps the channel, but it doesn't hurt you. Nobody sees that you liked a video. Yeah, just appreciate you being here, honestly. We'll see if our play works out or if we get stopped out here. Typically, when you see something like this happen in London, we took out these relative equal lows. We knew these were going to be taken out at some point. I just wasn't sure that it was going to be London. It was going to be so quick. But we have another original consolidation here. So we could head lower, finish off this area, and then head higher still, even. So we'll keep that in mind. $17.10. What is this? I think I had. All right, well, if this is meant to go lower, then it's going to stop us out. But our stop is well in profit, so we're okay with that. Oil is creeping upwards still. Very slowly, though. Excuse me. One thing to note, this low here, 17,002. I'm curious if we head up to there and then reject, or if we blow through it, treat this as an inversion fair value gap to bounce higher. My draw on liquidity is still higher. That weekly premium consequent should be consequent encroachment. This thing here, that's still my draw. Even in this premium. That retracement didn't give us a daily shift lower yet. So until I see a daily shift lower, I'm not considering any market structure shift. To be legitimate. All right, let's see. Okay, so dollar has headed down into a down close candle area. It doesn't have to do anything. That's on the 30-minute. On the 15-minute, it bounced off of a little fair value gap on, yep, it bounced right off of a fair value gap there. So we'll see if it holds or if it starts its way back up to the mitigation block. I'd like for it to head down to take out some stops there and to take out the remaining liquidity void from this morning. That would be ideal. As Delphine had pointed out earlier today, there's that new day opening gap on the dollar index. Keep in mind. So here, I think we can, we'll leave it. We'll leave the stop just as a protective measure. Nothing happening during New York Open. New York kill zone. No major plays to be made. I mean, there was a return back to fair value gap, which could have netted you maybe 10 handles ish. 20 handles if you got the true low tick and true bottom tick and high tick, sorry. See an oil protect that daily buy side quite a bit. Given oil's need to head higher, being that there's a weekly volume imbalance that hasn't, well, take a look. We traded through this weekly imbalance on the daily chart, but haven't done so yet on the weekly chart. So I think there's room for us to head higher on oil. But I need to see us break above this short-term high that we're at right now. Dollar continues to head lower. So I think Delphine's draw on liquidity is likely correct. Ever since we took out that mitigation block. Dollar continues to move lower. Indices are kind of following along, so that's not fantastic. Oil's moving pretty slowly right now, so nothing there. The dollar is rising a little bit. We see us selling off to that fair value gap. And we might get taken out here with dollar on the rise. There you go. So we just got taken out there. Given the heaviness of this market, I'm not going to re-enter long. I'll look to see instead if we see displacement lower, I may consider entering short, but depends on how dollar is treated right now, because right now dollar is rising and indices are rising too. So very weird point in time. Let's wait for open and see if that gives us any clues. All right, I'll be right back in a moment. Okay, let's get back. All right, here we go. Let's see what we got going on here. Absolutely nothing but consolidation. Asia range high. You can kind of see how we've got Asia's range high. We don't know if we'll trade up to there yet. Dollar does seem to continue to shut down there, and it's kind of crazy that it went down to where it did and then stopped us out there. Because that was like almost like one tick below that is where market went to. Does that mean that it's hunting my stops? No. That means my stops were placed incorrectly, and that's all. Had we been placed below this short-term low, we would have been fine. But we chose to move our stops up into profit where markets could see fair value, and they took out sell-side liquidity, grabbed those, and then headed higher. So, yeah, I think that governs some poor stop loss management. Today we will look for us to return to a bearish order block potentially. So I guess it'd be better if I just use this range. Let me see if I can raise that a little bit. I'll just treat bearish order blocks like sell side imbalances, red, so that we know we might reject from there. Like that. Yep. So we'll treat that as a bearish order block. And then this sell side we can draw out to today as well. Buy side liquidity. Its height was 17,046 if I recall correctly. I'm looking for failures of these. Remove these here, remove these there. Let's put, so our sell side got taken earlier up here. So what do we have left? We've got, if we move this down here, we have our sell side liquidity here. And that sell side liquidity is 16961.50. It's definitely one that we're keeping an eye on, but we have a few different ones available to us. Let me see if I can grab these. Premium Cibi low. 1 week premium Cibi low. Sell side liquidity, premium Cibi low. Let me take a look at the real-time hour charts real quick. So make sure our real-time hour levels are appropriate. So we ended the day at this mark. And we are starting the day somewhere around here. So what this means is that there's going to be a huge, I guess I should probably put that here. This is to be the high. Our real-time hour gap if markets open up like this, you can kind of see how our real-time hours charts is going to be a big gap to the upside to fill. From the open to the close, there'll be some areas to fill within this area here. What does that mean? Well, that means if this goes up first to fill that, it could either continue and fill the remainder of that gap and head higher, or we could treat this as a movement up, fill in halfway, get to one of these bearish order blocks here, and then head lower to continue London. Because keep in mind, we haven't officially come down here come time of real-time hour opening. If we open around here, we have this sell side liquidity that real-time hours hasn't taken out yet. And yeah, I think that's really it. That's all we're really looking for there. We still haven't seen true movement lower, so we'll have to see how price reacts in the beginning of the day. If we head up first, that's what I would be looking for, to head up to mitigate the real-time hour gap. Looks like so nothing happening before the market begins. We'll keep our eyes on 10 o'clock in the morning to see if what forms there, what fair value gap forms. Nothing happening on oil as well. Oil will wait for a run up to the 10:30 a.m. crude oil inventories, and then price is going to move on oil. So we'll be playing that. $12.20. 12.13 was the last crude oil inventory. Crude oil moved upwards. Last time we had inventories. And let me see if I can see on the 15-minute. 13. So crude oil inventories last time we had it ended up giving us a Judas swing at 9:30, and then we moved up, chopped quite a bit actually. $10.30 we saw a rise, we saw movement down, so difficult conditions for last week's 10:30 a.m. but generally looking for discount to go premium was the right move. Here, a little bit more difficult to tell. As we just took a buy side liquidity. Let's see. Okay, so again, nothing really happening. We need to wait and see what 9:30 a.m. news gives us. And of course, 10 o'clock, CB consumer confidence and existing home sales will take us somewhere. things while I wait. Okay. Let's see. All right, so call 11:30. I'll have to head to. All right, so about 14 minutes till New York Open. We still see dollar has not gone down to take out its liquidity void, so it could be a potential draw lower. We have taken out a short-term low just now. Nothing really happening on indices. We're seeing lower lows across the board. So what we want to do is we want to look for displacement here, right? And remember, we're going to be opening up with a pretty large movement. With the real-time hour gap, we're going to be moving a fairly large real-time hour gap, so you want to keep that in mind. If we do get that gap upwards, I think we end up heading higher first to take out that gap, maybe heading to that 15-minute bearish order block and inversion fair value gap. I guess I should label that as well. Trying to get better at annotating. I'm not as good as ICT, but I definitely want to be, but you know, I'm still learning. Not perfect. Okay, so our range in London here. Let's put a fib on this swing as well. Okay, so if we take a look at that, where does that, it's kind of interesting, right? You see that bearish order block there? It resides right at equilibrium. So I'm thinking I might take this, I'm going to plan to take this up to that point and then reverse around that area. I'll look for evidence of reversal around that bearish order block there. Because I don't think it's going to head much higher. If it bounces, I would expect it to reject off of that inversion fair value gap. If we are going to head lower, as oftentimes in London, New York follows what happened in London. But we'll see. About 11 minutes till open. I'm going to keep an eye on. So a couple of things here, right? You have relative equal highs here. You have relative equal highs there. And then on the way up, we had short-term low, short-term low, short-term low, short-term low, short-term low. This is an intermediate short-term low, so we're going to mark that as a sell side liquidity. And we're going to look to see how price books around that area. If we see price jump below here and instantly spike back up, that will be telling for us to go up to, at the very least, go back and fill in half of this outstanding real-time hour gap that you see here. If we head up first and take this out, I'm guessing it heads all the way up to that bearish order block. But let's see where the first initial Judas swing is at 9:30 in the morning. Oil is on its way back down. Let's see what happened on the 15-minute. State of delivery, I think, is still to the upside, but there is a fair value gap to be had. All right, we're seeing some movement upwards first. Little spike up there. Is that displacement? Well, not really, not yet. Let's see where Milo stopped. 69, 82, and 70. Maybe I'll close the position and wait. About 7 minutes before open, is that it? Yeah. I see us heading up to that relative equal high first. If we head up first, I'd be definitely long second, looking for that Judas swing up, and then long second. Dollar is rising, so technically we should see some movement lower, but let's see. Dollar still is rising, yeah. Again, don't take any of my trades. I'm not licensed by the CFTC to provide financial advice. These trades you can and will lose money if you take these trades. I'm testing the market, seeing where it wants to go. I'm going to close out of this for the time being, and let the 9:30 a.m. bell do its work first before I head over. I'm keeping in mind that there's multiple sell stops here. I'm gonna wait to see which one of these it takes out first at the 9:30 a.m. opening bell. Because there's a lot of them here. Okay, so let's give a few more minutes here. Jacques Van Munya, this is a strange day, no action at all. Yeah, just wait for 9:30 a.m. bell and 10 o'clock. I think we'll get a silver bullet play at 10 o'clock. There should be a fair value gap which forms. So keep an eye out for that. Or we could be aiming for one of these fair value gaps as well at 10 o'clock. So all are valid. Either a 10 o'clock silver bullet is either a return to a fair value gap which exists, or creation of a fair value gap to return to and head higher. So we'll have to see what happens first, right? But keep in mind our real-time hour. This is our real-time hour gap. We're going to start with a large gap from the close of yesterday to the open of today. We will start with a fairly large gap. For that reason, I want to be, generally, I am aiming for us going longer than shorter. I'm seeing lower lows on, seeing some lower lows on S&P, higher lows on NASDAQ, lower lows on the others. So I'm going to go ahead and get long here. I'll leave my stop loss where it's at. And I'll re-enter if I get stopped out, by the way. But I'm seeing a little bit of divergence on NASDAQ. So I want to be positioned for this higher. And I want to take a sell order here. All right. So we're seeing us start to react a bit. We're seeing a front run, about 2 minutes till. We just took buy side liquidity there. And we'll see if it continues. 1 minute and 30 seconds remaining. And may want this to be a little bit lower here. Okay, so there's about 50 seconds left in the day here. We've taken buy side already, so I'm curious if we now head lower or if we head higher or not. Because we took buy side there. About 25 seconds left remaining on the timer here. About 5 seconds until open. Okay, I'm seeing yes. Continue. Good. Good, that's what we want to see. Want to see us head a little bit higher if possible here. We took out sell stops there. I want to see us head up higher to that bearish order block now. Want to see a big green candle above that buy stop. If we don't get it, then we might be reversing. Real-time hour chart, we opened and opened around here. So there's still room. It's okay, we got stopped out. We kind of expected that to happen. We wanted to go fill out the rest of this outstanding liquidity void above it first. Okay. Let's see us head all the way up to that bearish order block now. Add on up there. We're still seeing price move smoothly to the upside. And take out some bullish order blocks there to re-enter, pick up some more orders. And we should see, we are seeing us build above here, so that's good. We want to see that. And we want to make sure our take profit is there. All right, so we revisited low there. And we're seeing us hold above here, so we should see us move up to that. Once we take out this short-term high here, we should be able to see us run towards that bearish order block up there. Okay, that's good. Should see some big green candles coming soon. and I will be out come once we hit that bearish order block up there. We can de-risk to be in profit now, with little need to remove risk there. We'll take 3 off at this limit up here. Once we head up there once more, we should test that once more. If we don't, then we're gonna, kick the bucket. But we've taken another buy side liquidity recently, so it makes sense that we might head down to take sell side. We haven't reached a premium though, so for that reason, I think that sell stop is still gonna make it there. I do want to be careful with this stop though, because we could get stopped out and then it could run. But right now we have 3 taken there, good. So now we can move our stops to below here, and we should be able to see that either run for the bearish order block or return south to stop us out, because we have a overall run up to, and soon we'll reach that 50% mark there. From the swing high origination to the swing low there, we should hit the 50% mark shortly. In fact, one might say that we've already gotten there pretty much. So let's see. That's why we take partials, right? So we'll let price do its thing for now. Our stop is in profit now. We don't have to worry about that anymore. And we still expect it to get up to that bearish order block first. Meanwhile, as we wait for that, we will position ourselves further. So now we should be able to raise our stops even more to below the most recent second low. Once we have another short-term high here, we should see price reach up for that bearish order block and reject from there. Should see some big green candles to take out that bearish order block now and reach up to that, plus 1 tick is what I'm expecting. And if it doesn't reach that, that tells us something as well. It's really weak if it can't reach up to that point. So price is engineering a ceiling there, thinking that that's a resistance. That's not. It should blow through that as well. So now I should be okay with moving my stop up to here. And then we should see price wick up there and knock out the bearish order block there. Boom. And we're out. Hopefully that was exciting. Hopefully that helped. Hopefully that was interesting, and hopefully that tape reading was as expected. So what happens now? We need to see if this will return at the inversion fair value gap here. We need to see if it's going to react here or if it will continue higher. We don't know, right? So let me switch to a different account now. We'll reset. With this movement down below, we saw that we took sell stops. I had mentioned that in the morning, right? We took out some of those sell stops. I re-entered. We got stopped out. We re-entered. No big deal. Here, remember, we are at a 50% mark from swing high to swing low. So we're above that 50% mark. So we're now looking to see, okay, well, do we reach up briefly into this sell side imbalance here? And do we reject off of this inversion fair value gap, or do we continue even higher now? So dollar is kind of just stuck there. It's not really doing anything. It had been going down for the last few minutes there, right? So right now we're reaching up into optimal trade entry. The high of this order block is 1712. So that's what I'll be looking for next, is that 1712. Seeing what we do here is kind of important, because if we are going to continue higher, which we did not create a lower low on this, keep that in mind, right? So if we're looking at the 4-hour chart, you can kind of still see that we went down into a 4-hour bullish order block, and now we're bouncing from that, aiming for 17046 high sell side there. We are at the top of this inversion fair value gap, so we need to see a close above. So we want to see a close above this inversion fair value gap here. This should go to the Europe down. Sometimes you got V or U. Oh, you thinking this is a V or U shaped? Yeah, maybe. But keep in mind, the higher time frames are always king, right? So the higher time frames are what we look for. We have and maybe what I can do is, let me do something here. Duplicate in new tab. Let's make this the 240. So the 4-hour chart. So this is the 4-hour chart here. And you can kind of clearly see that we came to a 4-hour bullish order block here and bounce off of that. We returned to this and came back off of that. So we should be heading to 17046 next. If we can stop and hold above this inversion fair value gap is kind of key here, because that's right at an optimal trade entry too. So note on the 5-minute, we've breached through a lot of previous gaps here as well, and we're about to reach the real-time hour chart high. So remember, I mentioned that there's a high likelihood we come up here first, and then now I'm looking for breakers. I'm looking for on the lower time frame. Let me see if I can show this or not. So I'm looking for this to be a low, a high, low, higher high. And then I want to see this turn into a breaker and break down below. I want to see if we get like displacement below this area here. So there. Now, if we return to that breaker, I'll take this short. Sell 2 right here, for example. If we can get there. I don't know if we're going to get there or not, but this is what it looks like on the 1-minute chart. This is what it looks like on the 5-second chart. So we will lower our stops to the top of that breaker. And we will aim for volume imbalance. Actually, we'll aim for, so it might be invalidated there might not be enough juice down here to head lower. But we didn't get a close above, so I mean, I am kind of curious about this. So we need to see displacement, otherwise we're gonna end up heading higher. Okay, I don't think this is gonna go any lower here. It's supporting this too strongly. All right, I'll get stopped out in profit. I don't care. I don't like the way it's running to the short sell side. During COVID, you got something like that. Range can be 23 to 12. Yeah, COVID is a different story. That's a world event you can't possibly predict. Okay, so we bounced off the low there. Four-hour. So we're keeping in mind that we have 13 minutes left on the 4-hour chart, 13 minutes left on the hourly chart. 5 seconds. Let me see if I can break this out to maybe 10:45 a.m. So if this is going to be a breaker, we would needed to see like very, very dynamic movement lower. So I don't think that this is going to serve here. I think that the draw on liquidity is going to still draw price a little bit higher first. But let's see. I mean, price can and is permitted to close within this breaker. Now, if it closes above it like that, that's not what we don't want to see, right? If we're short. So I don't think that this breaker is valid. I think this is invalidated here. But let's see. Let's see this, how it reacts here. We need to see if we close above this inversion fair value gap. If that price reading in the morning was fun or good, just drop me a like, drop me a chat, give me something. Right now we're in a premium here. We know that we've got a little bit of movement remaining. And let me take a look on the hourly chart here. Try something. Technically, the swing is from here to here, but either way, we're in optimal trade entry territory. So this is where I'll be looking for evidence of shorts if I was going to go short. My bias is still long. My bias is still to the midpoint of this weekly SIBI. But we need to hit 17.046 high first if we're going to do that. Okay, so the minute chart looks like this. We came down into fair value gap and are currently kind of like dawdling around this area. We are in a premium though, so because that breaker didn't hold, or at least it hasn't held yet, we need to see what happens at 10 o'clock in the morning. Let's see, oil headed higher. Take an oil trade higher here. Sell one up here. Let's see, what would that put us at? 37, yeah. There we go. Give me some juice on the oil. I'm running a couple trades right now. So we see that we disrespected that breaker here so far on the lower time frames, right? So we don't really treat that with any more we don't give it any more room to grow there. So this breaker failed, and that's fine. We didn't see displacement, so likely we'll head higher. And we're about to remove that range there pretty soon. News in 10 minutes. Yes, news in 10 minutes. So we know that we've completed the opening range gap now. Pretty much. I mean, you might as well say that we've completed this purple line and this pink line. That's our real-time hour gap. So whenever we open, that was the gap remaining. So we need to now look to see if we see evidence of breaks downwards. So like really big displacements is what we're looking for. And if we see big displacements, we can then seek further movement. 4 hour still looks like it's bounced up from here. Not to say it can't, but there's still 7 minutes left, so it's probably going to end with a nice big fat green candle. Same with the hourly. There's a good chance it's going to end with a big fat green candle. Oils are tracing a little bit, but not too much. On our indices, we're seeing lower highs overall, so nothing out of the ordinary there. Equal highs on S&P, equal highs on NASDAQ, but lower highs on the Dow. So nothing, well, I guess a little bit there, but it's still rising. So, I mean, we're keeping that in mind. All right, so let's see what's going on here. Dollar itself is still moving south. Oil looks like it's heading lower. Um, Originally, I was thinking it would head higher here, but I guess it has indeed decided to retrace first. So perhaps it's not giving me what I want there. Dollar, again, it's heading back to the downside, which is strange because equities as well are kind of, oh, there we go. There's that push. Okay, there you go. So now we should be able to get rid of this. We don't need to refer to that. Again, this inversion fair value gap can be referred to, but only as a bouncing point to head even higher. Now, we've completed the real-time hour gap. We've completed that range now and are approaching the previous high of 17,027. That was the real-time hour high. Okay. Okay. About 4 minutes until news. We are really getting close to some of our other highs here. There is a 5-minute breaker here that I'm watching closely. So we see a high, low, higher, high, lower, low, displacement lower. And then actually this whole set of candles is a breaker. Let me see if there's anything on the 1 minute here. I would say the lowest body candle combo is right around here. So that is what I would be looking for price to head up to. Okay. Dollar itself is heading, jumping a little bit higher for now. Oil is stagnant, not really doing its thing, but I do expect it to head higher overall. Okay. So now we have about 2 minutes remaining. Jacques says Tara. Not really sure what that means, but Tara. All right, so we're seeing a little bit of movement now to the downside. Nothing considered displacement just yet, as we can see on the lower time frame, as we still can see quite a bit of consolidation here, right? So what happens, so a couple things that we look for here. We see us have displacement lower, which would mean we can then aim for these relative equal lows down here. And we can remove this one now. Or we see us blow through and continue to create higher highs. There we go. Oil is back into the green. Waiting for 10:30 a.m., of course. And we are looking at price now, and we see consolidation here as expected. Let's give ourselves 25 more seconds until we see further. Okay, we're starting to see a little bit of movement here. We came down, took out some stops there, and we bounced off of that inversion fair value gap right on that low. You see that? Technically this should be slightly fixed up around here. So we should be aiming for that 17,046 now. But let's keep in mind this breaker. We'll see if this turns into anything. On the lower time frames, we see that we reacted at that breaker, but it's not enough. We say a low, high, a high, low, higher, high. We need to see a displacement lower below this inversion fair value gap. Once we see that, that's going to be a key that we could potentially see lower prices, at the very least into this mitigation block down here. So we need to see displacement here. Otherwise, we're going to keep heading upwards. And we need to see displacement below high, low, higher, high, lower, low. We need to see that. Oil's trade is still ranging here. We anticipate it heading higher still, though. If it doesn't, then we'll get stopped out. No harm, no foul. But it will wait for the 10:30 a.m. Okay, so we still haven't seen true displacement lower at that breaker yet. We see a high, low, lower high. If we see a high, low, lower high, and it heads down, then it will not give us a lot of time if it retraces back to 17,016.25. If we see a big displacement lower now, 17,016.25 won't give us a lot of time. So we didn't see a huge displacement there. That was a drop back into the inversion fair value gap, right? So I don't think shorts can be trusted yet. Um, 10 points here and there, yes, absolutely. 10 points here and there you could have taken out of the market there for brief shorts. But look at this price action here. Look at how it's responded to the inversion fair value gap, right? So 17,046 is still in motion, and our higher weekly draw on liquidity still is in play. Oil is dropping a bit. We're back into that breaker area. We traded up to a bearish order block on the 15 minutes, combined with a high end, the premium side of a sell side imbalance there. So it made sense for us to reject there briefly. But looking at price, it does seem like it is still holding this area quite well and not immediately rejecting. If we had market sentiment going completely south, we would see some pretty large institutional ownership in this area, but we don't. Um, so we need to be wary on what we see here. Oil back in green on that trade as well, and we might see a spike to 1746 with this run off of the inversion fair value gap now. I will take this up to and only to the okay, so we'll take a scalp here. If it turns out, great. And then if it doesn't, then so be it. So as you can see, it didn't turn out. Oil is moving quite well. We can move our stop up now. Let me see what we have here. So it almost hit the midnight open there. Almost. So keep in mind, if we're looking for shorts, going short above the midnight open would be ideal. Obviously, if we're going long, if our bias is long, going long any time below that is ideal. We can see that longs made precipitously good returns back from the base there. Let's see what our oil trade is doing. How much is commissions here? 24.52, $8. Okay. So we're watching this oil trade while we wait. I do think that we will end up running for that 17.046 after this retracement down here. Let me see 1 minute, 5 minute. So 1 minute has a nice bullish order block at the 17.028 right around here. And if this fails here, then we know that it's destined to head lower. But I think that with this movement now off of that bearish, yeah, there we go. So we want to see us I'm gonna get rid of one at midnight open, and then we can move our stop to the top of this breaker. In fact, I can move it to the volume imbalance down here. So if we get stopped out, then we get stopped out. It is what it is, but I think we're gonna head up to that 17,046. Re-entry 17,046 being our target, and then a few. And then I'll keep one limit order here. Stop is below the bearish breaker. Because if it heads down there, it's going to head down there. Like there's no question about it. It's going to head all the way down. Okay, let me see what oil is doing. Oil has dropped down a little bit and come back as well, as it is preparing for 10 a.m. oil inventories. Okay, so price does have a fair value gap below us. Now that I see, we should keep our stop around here because there's a fair value gap beneath us. And I see that on the 1 minute time frame. And for instance, the low of that would be roughly here. So I want to place an order at the midpoint of that fair value gap. Okay. About 18 minutes till oil inventories. Let's see how we didn't get our order. Dang. Maybe we'll get it on this run. No? It's just keeps getting bought up there. Doesn't look like we're gonna get our limit order. I have faith. Okay, so we still see price being supported here. What time is it? About 10:14. Doesn't look like we're gonna get our limit order there. All right, let's see what's going on over here. Nothing's happening on oil. Kind of just consolidating for now. Okay, so it doesn't look like we're gonna get our limit order. All right, well, guess we'll have to cancel this one. Let's move our stop loss off. Below the bearish order block. And if we lose that, then we lose that, right? So be it. Now we can move our stops to in profit. We should be able to, at least. I'm going to keep mine there for the time being because those are relative equal lows there. But it does look like we are starting the ascent upwards. All right, so we can move our stops up now. Should have no need to shift. We'll take our first profit at midnight open now, so we should see a spike up to that point, 17,041 soon. And then, of course, we will run for buy side. Oops, that should say buy side liquidity. My bad. Okay, so we should see that run up to midnight opening price soon. And once we break through that, we'll quickly break up to 17,046 as well. All right, so we can move our sell stop up now. And we should see us break through 17,046. We're giving it a couple of pips there to break through since there are a few orders above this area. There we go. So we just got our second trade of the day, different account. Good. Hopefully that tape reading was helpful there. We obviously we noticed that we had areas to potentially shift, but because of our bias, these aren't rendered invalid on the bearish side. Not to say it won't be useful in the future, but we did just take buy side liquidity, so we need to see if it wants to return back for sell side liquidity now. Oil has decreased a bit. Came back down to an area of liquidity and bullish order block, and has supported there. Let me see. Oh, how did I do this before? There we go. Let's go. Oh, we're gonna get stopped out on our oil trade, aren't we? Yep. Okay. Fair enough. Let's see what this is. Maybe 484. me see what else is going on here. We just took buy side liquidity on the hourly, and we have 17,089 to reach for next. If we close above here, we can kind of treat this as a low, high, low, low, high, lower, low, higher, high. Potentially, we could treat this short-term low as well, technically. So that could serve as a bullish breaker there too, on the very top there, and a mitigation block in general. Breakers are mitigation in general. For our, so oil might head down to 74.61, which is what I would expect to see before we head anywhere. So 74.61 is a daily buy side liquidity. We were a little early on oil, but that's okay. We need to see how price reacts here. At 10:30, so there should get some pretty good moves here. We are reaching higher, so again, 17,089 is our next weekly draw. That's what my bias has been and what it continues to be. So do we see us bounce off of this short-term relative equal high here? We did see a bounce there. We need to see really big displacement though. Do we have any other economic events? No. We have 10:30 a.m.s for oil, but nothing else. 12 o'clock, Goolsby speaks, so Fed member speaking at noon. You shouldn't be trading at noon anyways. Shift over to another account. I'm not taking any trades right now. 10:22. Let's see. So 10 o'clock, we already got a return to fair value gap here. So this is a silver bullet run from 25 to 35 to 45. There were two silver bullets you could have taken there. 35 to 45 or 25 to 35 would have been 10 points each. Those are the 10 a.m. silver bullets, by the way. Okay, let me check a couple things here. All right. As expected, things are petering out a little bit. I do think we continue to run, but at this point, we're in such a premium that your probability of things retracing on you greatly increases. Right now, I'm waiting on a oil trade to come to fruition. kind of angry that this thing stopped me out. It's 20 points there. So it's 10:30. We're nearing a closure on London. We're hitting the London close. So 35 minutes left until London closes. And then we're watching oil to see how this plays. But that was a nice move that we captured in the morning. Couple moves actually. Yes, we did get stopped out in the beginning when we were trying to trade at 7 a.m. We clearly see that lower lows had not formed, and once we hit the open, we knew that we knew what we were looking for. We knew what model we were looking for. We knew what stops we were looking for before entering, and yeah, worked out quite well. Oil. Such a disappointment. Had to stop me out first, huh? It's okay, we can make it back. All right, so see how we're at a premium here? We see how we've taken buy side already? Even if we're going to head higher, we need to retrace a bit before we can do so. There's a chance that it consolidates around this area. Given that there are people who are thinking this is way too high, they want to enter short. All those people got their asses handed to them today. Any shorts got squeezed. And the higher time frame prevails at the end of the day. Our 4-hour chart is continuing upwards, and we should be reaching for this weekly consequent encroachment, and then eventually we will retrace back down to this bullish order block on the 4-hour. For the time being, we'll assume that we are still headed higher. Okay, about 44 seconds till oil inventories gets released. I'm going to be trading this one. Oh, 74.84. 74. 84. About 18 seconds left till oil inventories get out. Then I want us to take this rectangle. inventories are out. All right, inventories are out. We went down to fill out fair value gap there. And we can see come on, do your thing. Okay, let's see what's going on over here. We have reached up and expanded, and we are still in expansion. We should drop down into that 1 minute bullish order block there. Next, you see that fair value gap along with this. I would expect us to drop down into here, tag that briefly, and then head upwards potentially. Or if we don't head that far down, this order block is what I would be looking to next. Wow, oil is just ripping to the downside. Let's see if it covers this here. The oil is in a bit of a premium. NASDAQ, S&P, higher highs. Still, you saw us trade down into this fair value gap on the 1 minute. Again, we'll keep an eye out for the high on this candle here. I guess I should technically just make this a treat that range there. So you watch that range here. We see evidence of movement higher or not. Antonio, what a difference a day makes. Always. You can't control some of the things that happen throughout the day, right? So has price gotten down to that bullish order block yet? No. Let's see if it makes it down there or not. Okay, it hit there. Tight stop here. We'll put our stop below the midpoint of that bullish order block because we are in premium after all. So we'll use the midpoint of that bullish order block. And our target, of course, will be our terminus 17089. Okay. So if this fails on us, it's because we went long in a premium, kind of as expected. So oil seems to be tearing to the downside here. What's happening over here? We're still seeing us support that area a little bit. We need to see displacement now, otherwise we might just chop for the rest of the morning. So we're not seeing immediate displacement here. So let's see what the 1050 AM macro runs, and we'll see if we can get up to our target level there. All right, so we're starting to see a little bit of a run here. We should be safe to move our stops to the low. In fact, now that we're seeing some movement, we should be able to also shift ours into profit now. And we should be okay there. So we should see us take this short here. Price can head up into this sell side imbalance up here and then reject. We want to take one off at previous high. So we'll consider that. So we want to sell one when we get up to this level here to de-risk. And then we'll leave the runner to continue until Valhalla at 17089. Okay, so this. Okay. try this once more on oil. If you can't get it, it will be quite a disappointment here. All right, let's see. The difference a day makes when the market is in trouble. Don't force entries, and today it is bullish. Gladiator reference, Antonio, I guess. All right, so we might get stopped out here. If so, we will look for a point of reentry. If we head back down to that area, we failed to make a higher high. So I want to see how price trades here. If we break that short-term low or head back down into that bullish order block there, I want to see how we trade there. Okay. Try once more. Oh, we guess, yep, doesn't look like it's gonna want us to go here. So maybe the next 5 minute, we will trade down to the 5 minute fair value gap down there. Let's see. We have an imbalance that is around our bullish order block down further on the 5 minute chart that I'm looking at right now as a potential. We are above the Asia range here. Okay. We bounced off of Asia. Took some sell stops there. And okay. And we'll just let that go for the rest of the day here. All right, so where are we at? Let's extend this out. 12 o'clock. So we're back at that bullish order block area. We dipped below there and closed on the 1 minute, so I'm hesitant to think that we'll head higher here. But we are seeing some price action. So again, I'm looking at that 5 minute one down here now. Kind of see that combo there. The next one, it's still in a premium though, so you have to be careful, right? Move some of these. All right, so yeah, have to be careful going long when it's in this big of a premium. Keep in mind this Asia range, we want to be buyers below that midnight range, so that at the very least wait for that buy side imbalance on the lower end with this bullish order block here. Wait for that 5 minute imbalance at the very least. There's not really much here, but take this swing here. But let's take a look at this swing. But we're at the 25% mark. Equilibrium would be technically down here, but that's a long ways to go. I would be surprised if we hit it down there. So that's why I think that this potentially could be an area, but again, that's going long in a premium. So after we've hit a higher time, after we've hit a target of buy side being taken there, right? What about the 1 hour, Antonio? Four hours retracing after touching that area. SMT divergence on the Dow. Dow is equal highs, but NASDAQ and S&P are seeing lower highs. So, for the time being, I want to see what we do here. Traded down to that bullish order block. So the high on this candle is 17.037. Low on this candle is 17.037.25. It's 10:55 as well, so you're gonna need to head out soon. 11:30. Sprint. Okay. Oil. You are the bane of my existence. What specifically about it, Antonio, though? You need to be specific about it, right? Like formation, it's interesting. What does that tell you, you know? Or are you just noting it because it's a candlestick pattern, you know? Candlesticks patterns don't really tell us very much. It's more so the narrative when it's combined with where are we in premium, discount, are we in a trending market, did we take relative equal highs, did we take buy side yet, and have we taken sell side yet? Well, we took buy side, so naturally we would venture to say, hey, we likely will aim for sell side liquidity or imbalance now, right? So potentially I would not place a ton of merit on this particular let me get rid of this one here. I wouldn't place a ton of merit on this because it's in a premium, right? And we just took buy side. So I think that we could head a little bit lower into equilibrium of this swing. Oh, actually I have it on the lower time frame here. I think we could hit the equilibrium down here. And it does look like that inversion fair value gap is there. Let's see if I can put this on all charts. So that inversion fair value gap is below equilibrium here. So if we traded down to that, I would expect us to head higher. Let's see. Minute 20 for the hourly candle to close. Oh, I didn't take it long. I don't know if it's going to hit during lunchtime, but 17,089, our weekly draw on liquidity, likely will hit. I imagine it'll hit today, but let's see. Four-hour chart, still heading upwards. I mean, it's still closing, or at least potentially closing above that 17,046 buy side. Okay. So we just traded up into sell side imbalance. So on the higher time frames, this is not a market structure shift. We start to see market structure shifts when we see a combination of higher time frame and lower time frame. This is really just getting into the London close. We probably will end up consolidating for the afternoon here. 3 a.m., 10:30 a.m. 3 a.m., 10:30. Oh, 37.5. Not sure what you're pointing out there, Antonio. Not sure. Can you clarify? So here I expect us to consolidate since we are at London close. I'm going to let me remove this real quick. We are above midnight open, so I think we will end up heading towards 17,089 today. I can't really get a good grasp on whether it wants to do it right now or if it wants to retrace further, but yeah, I have to unfortunately go get ready for a presentation. And oh, it's on the 30-minute. Oh, nice. Let's see. I'll be honest, I don't use the 30-minute as much, Antonio. I should, but I don't. But let's take a look either way. Duplicate this and look at the 30-minute chart. Three-minute high was 17,040. 10:30. Yeah, we busted through that. Yeah. And we're now rejecting off the top of the Asia range. Kind of bounce straight off the top of that. So that's a good sign. All right. All right. Well, everyone, it's 11 o'clock. We'll go on a break here for us. I have to manage an oil trade that is running off right now. Maybe I'll leave it, actually. All right. Yeah. As you can see, that premium BSI isn't really holding much. I think we head lower. Look for that inversion fair value gap to be referred to before we head higher today. So keep this inversion fair value gap in mind. It is below the 50% point of this current swing. So keep that in mind for the time being. Hey, what's up, Dusko? Yeah, glad to have you here, man. Antonio, I'm out as well. Made this AM a healthy amount. Very happy with the results. Good luck, everyone. Trade the plan, manage the risk. Market will reward you. Yes, absolutely. All right, take care, everyone. I'll keep this recording. I might stop by in the afternoon, see how the PM session goes. But yeah, so far so good. Pretty risk, pretty light today, and yeah, we'll catch up throughout the day. You know my draw, you know what I'm looking for, so I'll leave this to you to trade if this happens. So take care, everybody. We'll catch up in the afternoon. All right, I'm back. See what we got going on here, right? So we want to set one limit order up here. Sell limit right here. And I want us to see movement above here. Hope everyone's having a good afternoon here. So we want to see price remain above here. Kirk, good to see you, brother. Let me plug my phone in. Just came back for 2 o'clock. Silver bullet. We're looking for 10 handles here. We can de-risk now. So let's take the first one off. Let's see, we entered at 31. So let's take the first one off. At 41 here. So we're looking for 10 handles on this, right? Disco, bored as fuck. Yeah, I know, it's kind of crazy, right? But that's why you have me back here at, imagine that, at 2:15 I get back and we get into a trade. Awesome, right? So let's see. We're not going to move our stop. We're just going to keep these here. We like this movement here. Honestly, I want to keep the first take profit a little bit higher, but let's see how this turns out. I mean, I think we should be able to de-risk ourselves now. To just below this this low here. We shouldn't need to revisit this fair value gap anymore. So I'm of the impression that we will be heading higher from here, but let's see. You know, let's see. I want to set one limit up at 17,089 just because I want to see if it can get up there. It's a little bit of a move, but I mean, hey, we've seen worse. So if we do head up here, I think that this range, we came down to exactly, note this, right? So we came down to exactly equilibrium, right? So remember, I took this swing low right here, drew it up to this swing high, and what did we come down to? We came just shy of equilibrium, and then we went up, and then we came back down to take that out. And we'll see if we are able to maintain our movement upwards or if we head downwards into this area down here. So that's what I'm really keeping my eye out right now. I'm gonna move my stop up to 1 point and then a quarter just so that I don't get caught in the negative with fees. But yeah, I'm going to take one off when I get up to 17,041. And if we get stopped out, we get stopped out. So be it. It does look like a nice little slow grind downwards, but I mean, we're getting some big, nice pops here as well. So let's see if we get our afternoon macros here. We took buy side here, we took sell side out here. $15-minute looking like a little weak to the downside. Since we just did take sell side here, but we haven't taken buy side. That's what kind of worries me a little bit, but that's why we have our stop up in profit now. Even if this spikes down and takes us out and heads lower, we know we could have had, you know, a decent little 8 points there roughly. So we are still watching and waiting. We do see price heading down to back down to a discount here. And we'll re-enter here. Maybe not the best entry there, but so be it. If we head too much lower, we are going to be a little bit of trouble. Add one more. And if we see continuation to the downside, we might just close out. Yeah, it doesn't look like our buy is going to work here, fellas. Good try, but did not work out as expected. Looks like the sell side is going to win today, boys. I don't see I mean, we took sell side, but it looks like we're going to continue to take sell side. Looks pretty heavy to me. We would need to see some pretty strong movement here if we're gonna head back higher. So I don't think it looks like it's just gonna slow grind to the downside here. So let's reverse and see if what we might be able to aim for here. Probably the inversion fair value gap would be a first target, right? And we're going to keep a tight loss on this one because this is an inversion fair value gap. It can reverse very swiftly. As you can see, we got taken out there, but that's fine. We're going to keep a note. Once we hit that inversion fair value gap, what happens there? That's key. All right. So we keep seeing price being taken here. Let's see, 2:23 p.m. So there's a little bit of room left. Our sell stops will be below the inversion fair value gap. Let's get rid of this. Add one here. And add one here as well. One consideration here is that we could drop down into this fair value gap. That is a possibility for sure. I would prefer not doing that, but it certainly could. It does seem like it keeps taking sell stops though. So it looks like we're back at the real-time hour high. I actually don't want to add any more. This is having a really difficult time to the buy side. Not gonna lie. I want it to go to the buy side, but there's potential discount here that I can head down to first, so I'm really staying cognizant of that. And I might exit if this gives me the opportunity to. So it does look like it wants it to take it lower. A little disappointing here, but such is life. We'll wait for the discount then. So sell side keeps getting taken, buy side does not. We'll wait for evidence of us taking it above here. So we'll see if it trades down into this fair value gap below before we take the next move. I want to see if it heads down into this fair value gap first. It's hourly fair value gap. So below 17,008.25. So now we're well within optimal trade entry. And I want to start layering in some longs. Let's see, what's this level? 1707, not 75. $1,700 as well. High here, 16,988. So I have to be prepared for it to head far lower, right? 16,988. Its low is 17,008. That's 20 points, 20 handles that I have to be willing to sacrifice if I'm going to take this trade. Okay. So now my stop needs to be all the way down here if I'm going to take it. It has to be below the short-term low down here. So it's quite a bit of movement, but I have a few key areas that I would like to get to. $17,020, 17,16,999. Okay. Now we wait. Price can continue grinding down. So notice how now we're firmly in the midst of this segment here, right? We have this sell side, buy side imbalance, which we traded to. Now the question is do we remain heading to the downside, or is that sufficient in order for us to hang up a little bit higher? sell one here, sell one up here. And our stop will remain down below 16,970. Technically, the wick midpoint is something that we could also use. That wick midpoint here on the 15-minute. So as you can see, we came down into optimal trade entry. And now we kind of just have to wait. See if that was a sufficient rundown into discount before heading higher. Four-hour chart, we came down into equilibrium here. If we continue lower, I would, it's possible, definitely. All right. All right. Well, we'll know pretty soon if we're offsides here. Yeah, it doesn't look like we're getting any support to head higher. We're continuing to take sell side, and we're not hitting any buy side here. So if this goes far below 16,988, I kind of have to close it. It's gonna reach down really quickly. Where is it reaching towards? The relative equal lows down here. And we should see no exception that I imagine it'll take these relative equal lows out here. Oh, we should, given that movement down, we can trade up to this bearish order block here. and then also continue down to take out these relative equal lows. So we should see price head down to that relative equal low. We should see that take. Oh, Kevin says we hit sell side on yes. Let's see. Oh, so this might be a reversal point then. I don't have ES up, so I should probably be looking at that. All right, so NASDAQ, we've got that. So we should head down towards those relative equal lows there. And should see one more push down below there, ideally. Should see a push down below that area. Okay, good. So we knew that that rush kind of gave us that instance that we knew there were relative equal lows down here. That's the only reason we took that scalp. But that was a scalp. I was off sides in the beginning because I was thinking that we were going to leverage this as a buy side imbalance, sell side inefficiency, right? That was a failed attempt to go higher. And so once we started seeing volume come into play, we knew that where were our relative equal lows, they were to the downside, so we could reverse our play. Let's see, wondering if you got this down from the top. Trend is down, so it's down, pull up and down. Let's see, if you will trade the lines in proper way, you will be on top. Yeah, that's good to know. I think that we saw us take buy side on the hourly chart, and we saw that we couldn't stay above it. So what I should have noted, and what was really actually quite difficult for me to discern, was this didn't seem like a displacement lower until we got a true displacement lower. And the only time that we got that, of course, was right about here, right there, where we started to get displacement lower. We do see us go back below once more, come up to a fair value gap, and then it dives after then. So that completed the mini market maker sell model that occurred right there. And that was a really, really quick one too. Fadi Chai, thank you. But again, like my bias was incorrect. And so when I see signatures like that, I know I'm off sides. Like I know very, very quickly that I'm very, very off sides. Now that we've taken that buy side liquidity, or sorry, sell side liquidity, what do we see next, right? So we knew that we potentially could head down to here. I don't know if we will now that we took buy side, or sell side liquidity. I don't know if we're gonna take that further, but if we look at the 4-hour chart, the 4-hour, although we bounced and took buy side, we've now come down and taken these two lows, relative equal lows here. So I'm looking for evidence for us to consolidate here. If we consolidate, then either a couple of things could happen. If we consolidate here, either we could continue our check lower, or we could continue our check higher. If this turns out to be a take on sell stops only. So that's what's going to be key, right? That's going to be really key for us to see, hey, was this a run on stops on the low side? We don't need this anymore. We've already run down below that. And I think, what else do we have here? we don't see displacement and immediate movement away from that yet. So I would be hesitant about taking anything long. I imagine if it's going to go back long, we would need to consolidate a little bit. Okay, let's see. So nice little short there, but can it go lower? Yes, absolutely. We need to see how price is dictated today. On the higher time frames, let's actually do one thing here. Let's duplicate this. And let's make this a daily. So we can now see the daily charts too. Okay, there we go. All right, now we can see the daily charts as well. What I'm gonna do is I'm gonna start removing some of these that are cluttering our charts. We don't need these until we get back down to them. So we're gonna remove them for now. We can keep the big wig one, big level ones, but we don't care about the individual minutia. Okay. There we go. And we can even remove this as well because we don't need to refer to it just yet. These we can also remove and chart when we need them. So right now, 16,911 is potentially in the works if we continue to see, if we see immediate displacement from this, if we see a mitigation where we see all these people went long, now we went short, now we get back up to mitigation, they might want to sell their longs, and smart money might want to also go short as well. Overtraded this top. The big will be fine in the future. Have a nice night. Time to go to bed. Thanks, Jock. Yeah, hopefully you didn't overtrade too much. But be careful during lunchtime to trade. It's really difficult to trade during New York lunchtime. Price really screws you over during that time. So, all right, we'll see you in the future ones. Thanks, Jock. Okay, so we see evidence that we're not going anywhere anytime soon. Let me see if there's any, like 16,911 is our target we've had before. I will see if I can take 47. We're trading one account at a time here. There's an SMT divergence on the Dow where I'm seeing a little movement higher, but not on the higher time frames. Yeah, actually I am seeing a little bit of a divergence, but it could very well drop further. So we're at the SIBI low now, and we are going to continue here. So let's wait for pullbacks here, and we can take a couple positions down to 16,911 is going to be our target terminus. Now we had that 16,911 from the morning already, right? Taking any days off this week or the next? Yes. So Foudy, you can see my schedule up in this box up here. You can see that I'm taking a few days off. We can de-risk this trade now. And I'm taking a few days off here. Looks like we're going to trade straight down to that 16,911. We should see that taken out soon. Raise my stop. Re-enter. I didn't want to get stopped out there on a spike up. It's only a matter of time. We'll hit that 16,911. Guaranteed. There it is. There we go. Nice little trade. Switching the trend. And knowing that we had the draw marked out as a possibility today, we weren't sure that it was going to go down there, but we were certain after seeing this come back up and immediately rebalance. That's what clued us off. That's another different model, because that is essentially what you saw there is a breaker, right? So you saw a high, a low, a higher high, a break below mitigation, and a failure to come back to mitigation is what you saw there. So this was an actually you can see it a little better on the lower time frames, but so you can kind of see how once we broke down, we kept on failing to get below there, and then we saw it was heading down in a hurry, right? So this is a very, very interesting day, though, because where could it head down to now? It seems like it could head down into this, potentially this hourly bullish order block. Or sorry, 4-hour order block. On the hourly, we're already well down into another order block territory, right? So we just took out a lot of sell stops, right? Can it go lower? Absolutely it can. Yeah, absolutely it can. But will it? Don't know, right? We don't want to necessarily take the chance now that it's taken out 2 core sell sides. Can it run further? Yes. But the key question is where can it run to, right? So before, we knew there was a key hourly smooth low here. Or at least here, it looks like that. The next area it could head down to is likely the volume imbalance, that daily volume imbalance. If it's going to head lower, there's a chance that it's going to head down to that area. Judging by this movement, I mean, it's probably heading down to that volume imbalance, honest to God. We've taken this already way too far. And I don't necessarily want to take this short, but that is the current place that price seems to be heading down towards. You can kind of see even on lower time frames, there's nothing but sell stops being taken, and it just keeps on going. So likely it's going to head down to the let's see, what's my lowest account? Let's do 43. I don't know if I'm going to get here in time or not, but it's going to go down to this, basically that volume imbalance there. Oops. try this again. Oh, this might be actually a reversal here. Let me see. This might be a reversal here, folks. Look how quickly it's coming back up. That might be the reversal. Let's see. Need to see lower time frames. I need to see how it reacts here, though. It's about 60, 80, 40, 60, 80, 80 points up from there. So lots of good squeezes happening here. Let's see how it reacts at this mitigation block, though. This 16,911 sell side. Because it went down to a bullish order block on the hourly, and it came down to a 4-hour order block as well. See, it was really close to the new week opening gap, so that makes me think that it may want to continue to head down there. But we need to see if the state of delivery has shifted. Doesn't look like the state of delivery has shifted entirely. Okay, so we can take a few off once it hits its terminus down there. And we don't want to mess with the short any longer because of that type of reaction, right? So we'll be okay with keeping our trades green for the day. There's no more need for us to try and chase this to the downside, but I do think it's going to head down to that new week opening gap as the next level that it's going to aim for. In fact, just to show this, we should be able to see our model. Not model, sorry, price spooling basically is what we're playing here. We're playing a spool down to new week opening gap and a movement down to a previous new week opening gap here. And here's where we get squeezed. We might get squeezed here, but let's see. Our thesis here is that it hasn't hit the true terminus, that price is headed down to what none other than the daily opening gap. And we should see us head down that way. We have sell side liquidity still to be taken. And as you can see, we're going to be heading pretty feverishly to that segmentation here. We just got stopped out there. That's fine. Have a great day. Thanks for the awesome stream. Fadi, no, I hope you get some good rest. I'll be on tomorrow, but I'll only be on till 11 o'clock tomorrow, and then I have to play with the niece and nephew a little bit, and then I'll come back for the afternoon. But after then, so tomorrow will be the last day of true live trading, because after then I'm gonna be out for the rest of the year. So and then once work starts up in the coming year, I won't be able to trade nearly as much or as actively on stream, like seeing my video here. I will probably be off video, and I'll probably have to take trades outside of my outside of the day-to-day, because I'll be working my 9 to 5, right? So this time we took as really paid time off. Or watch price now. It's gonna aim and spool back to the new week opening gap, and then once it gets there, I imagine that we will I imagine that's where we're gonna kind of consolidate a little bit, but we should see a really sharp spike down to that 16,820 level soon, very, very soon, right? So very, very big sell-off here. This is one of the largest ones on the 4-hour chart in quite some time. So we should see us reach down here in a moment. And once you hit that level, I don't know where price is going to go then. This daily volume imbalance happens to be a new week opening gap, and it also happens to be a daily bullish order block still. So price does not have to go lower. In fact, there actually is no short-term low until we head down here. So the only way we would truly be bearish is if our price lowered to the point of this short-term low down here at 16,002. There's no other short-term low this entire way up. There's none that got created. So while today looks very, oh, there it is. So we headed down to our new week opening gap there, and we immediately rebalanced off of the top of that new week opening gap. So the core bit would be 16,774. What happens now at 16,774 is the key. Okay, so 16774, and we have that here as a potential level. Now I would anticipate some consolidation here. We're at the new week opening gap. So Monday and Tuesday we have traded up. Wednesday we see a sharp drop during the 2 p.m. Silver bullet time frame. And we see that we've immediately rebalanced off the low of that new week opening gap, so we actually could be headed lower too. There's a high possibility that we head down to 16774 next, which would be down here. There's relatively equal lows below here as well, so we want to keep that in mind. But we are in quite a bit of discount, so shorting in this far of a discount is going to be very difficult. Keep in mind you're in a range where we've traded up, traded down, traded up, traded down. You're in a balanced price range here too. Same with this on the 4-hour chart. You're in a range where price has traded to up and down frequently. Of course, price doesn't seem to care, and it just keeps on dropping. So getting back above the new week opening gap, I think, is going to be key, because then that's going to indicate that we've got consolidation going on now. So as you kind of see here, that new week opening gap got protected fairly well. So now I anticipate we consolidate around here for the remainder of the day. That was a pretty large drop, 1760 to 1660, 1760 through 16960 to 16860. So that was 200 points within the span of a small amount of time. That kind of move is what, I mean, this whole time on the way up, right? This whole time we were looking for evidence that we might get a start of a market maker sell model, the second stage of it, rather. So if this continues and we start to get some movement lower, then that'd be cool for us to start a market maker sell model. I think it's a little bit too soon. I think that we have a little bit more to go still, but who knows? I mean, market decides what price is fair to begin selling, right? And if market decides that that was it, then there's going to be a lot of shorts that are FOMOing to pile in now. What better way to blow off the top than to get shorts in and then blow off the top once more and then get everybody FOMO'd in both ways to squeeze both sides. So 44's around 122, 47's around 431. Okay, good. That's fine. And then I want to see, this one's the smallest one, right? 42, 42, 42. Okay, so Line in the sand for me is that bullish order block on the daily here, 16,774. We've broken through a handful of 4-hour short-term lows, and this is displacement for sure. It's displacement. Let's see what this is. Okay. Let's see what else we have here going on. All right, so we're seeing, this is what I consider to be market structure shift here. So you see the short-term high violated up here. This is what I kind of see when I see a market structure shift. So I'm going to take a long here. And, well, I should have waited a little bit. Technically, my long needs to have a safety net around here. So this is where I want to buy long. And we actually can have a few more down here as well, if we get them. Might not get them. Okay. We should be able to de-risk now. Take one off at the top here. I'll buy two more when we get down here, if we do. And I want to sell two more. We get there up here. Sell limit. I would like to keep this up here. I want to sell two up here as well. Now, if we break below, then selling is very much so heavily to the downside. We will be forced to close out of this long here. But I do consider that to be a short-term, like on the minute chart, I do see that as a market structure shift. We should be able to see us come back up a little bit from that new week opening gap. Unless the sell program is deeply ingrained and we just drop out here, I would imagine that we would get some form of retracement here.
Yeah.
Just in case, I'll keep my stop up at the top of this. Actually, we'll all right, so we should see some spooling here. And we should reach for some of those relative equal highs. Because that's what would squeeze our shorts quite well. And what that means is it should head to these highs there, yeah. 31. All right, so we should see us take the relative equal highs up here. And once we do that, we can move our stops. And we will wait to take our next areas of liquidity or get stopped out in profit. That's it. All right, so as we create higher highs like that, we can shift our stops up to the most recent leg higher, and we will leave our targets up there to be taken or to be stopped out. So 16,871 would be our next item there. You can clearly see this. This is a really easy market structure shift to see right here, right? It's very easy. It's at a key level. You can see that. You can see this short-term high. Key level, high, lower, low. Displacement back above that level. Return to fair value gap. This is 2022 model right there. And this is exactly a bullish breaker right there too. If you go down to a lower time frame and you look at this, for example, let me kind of draw this out here so that we can get an example here. It should be something around this area on the lower time frame. So if we go down to a lower time frame here, we can kind of see how this here, this served as a bullish breaker, a low, high, lower, low, displacement higher, return back into the fair value gap, displacement, breakaway gap. And now we have a breakaway gap. We can move our stops over to here. We'll have two more taken off in a moment at a key level, right? So we have two more taken off at this short-term high. And we should see those taken in a moment here. 40, come on. Give me one more spool. Give me a nice big little jump up there. In fact, we should be able to shift our stops up here as well. Dang, we just lost a little bit of value. All right, so that's good. We went down to a bullish order block on the 1 minute. We don't want to see it head any lower than that. We want to see it just stay there and head back up, right? Once we do see price head back up, we can shift our stop to just below that low. We need to see a displacement up higher, and we need to see 16,871 taken out. So 16,871.75. We need to see this short-term high taken out here, and we need to see this 16,871.75 taken out as well. We'll keep a really close eye on that. Once it gets and closes above the midway point of that, we'll be in the clear. If it doesn't, then we're going to get stopped out. So lots of shorts are trying to sell into their position and keep it protected here, right? All right, we're going to get stopped out here. There's a high likelihood. Or not. So it came down to that bullish order block twice now. And if we see our shorts get squeezed here, that's what we would expect. Once we create a market high, we should be able to move our stops up, but not any earlier than that. Okay, that's good. We want to see that. We want to see price. Oh, no, that's not what we want to see, but let's take one off. Oh, we took two off. Just kidding. All right, so either this goes to terminus or this gets us stopped out with the retracement. Either way, we're heavily in profit. Take one more off when we get up to here. And let's see. So we're seeing consolidation right now, 323. There's going to be a macro that runs it one direction or the other towards the end of the day, but price did exactly as we expected. Price went down to that new week opening gap and then accumulated a bit and then reversed a bit. So we saw that market structure shift at a key level. That was kind of key for today, right? So let's see if this stops us out here. Looks like those who are shorting are still trying to suppress the market from heading lower. Longs are kind of not quite there. Algos keeping it in this range for the time being. And there we are. Good. Nice little... So money made on both sides of the street, right? So that's a really, really good day. From another trading 4 individual accounts as well. Let's see what we ended up with. All right, yeah, not a bad day. Now since it's 324, I don't know what's gonna happen here, right? Like, yes, I see it came back down into a discount of this swing, but price from a macro perspective, if the algo is pretty heavy, it could treat this as just a tiny little blip. Just a tiny little blip on its way back down, right? So I don't know what's going to happen now. Price has slowed down quite a bit, so I don't know if it's going to head towards the bullish order block down here. I don't know if it's going to head down to that, maybe. And ultimately, we're looking at this rejection block down here, too. So remember, we took that out, but we do see that there's relative equal lows right above the weekly bearish order block there. So yeah, just to recap while it's here. The thing that made this a high probability, the thing that let me know this was a high probability that it was going to show at least a temporary reversal. And look at that. It came down to this, fill out the rest of this buy side imbalance, busted just down there, and then headed back up. So the thing that let me know was that this was a key level. This was the new week's opening gap. And we traded to it, through it, displaced back above it, came back down, gap formed, imbalance rather. So price went down to pick up some more orders. Any shorts who were shorting got stopped out here. Anyone who went long late because they thought it was a reversal got stopped out here, right? So all sorts of messing around, right? So with that amount of spooling, though, that was kind of key. You see, when you see this type of price activity, this is what's called a spool. And you didn't know about it really until you saw, I think, this displacement lower was kind of key. We didn't really truly have displacement lower until then. But when we did have that, every single move, like we started seeing that we kept on making lower lows within this segment of price up here. So originally I was thinking that, hey, maybe perhaps we will treat this as take on sell stops and then bounce higher. We did get a little bit of bounce, but not to the point where we kept on, we're able to make a higher high. And that was the theme from all of today, really. The only time we made a higher high was up here. We never made a higher high otherwise. Let me see. Let's see if we see on the E-mini 1 minute time frame, NASDAQ created a lower high on the 1 minute, while S&P created a higher high. So there's and the Dow created a higher high as well. And then even closer to that major drop at around 1 o'clock to 1:30. So 1 o'clock to 1:30, around that time frame. S&P created a lower high when NASDAQ created a higher high. Dow created a lower high. So we had a couple of confluences in SMC divergence, right? That would have been something that would have keyed me off that, hey, things are going lower, but I missed that SMT divergence. So I need to get a little bit better at identifying those. But yeah, it was clear as day now that I look at it further. And maybe what I might do is put NASDAQ. Let's see. NASDAQ overlay panel. Panel 2, new panel. There we go. There we go. It's a little bit easier to see on that. All right, so I just shifted my SMT divergence chart to have them in separate workspace, so I can see all three of them at once and draw candles accordingly. Where are we now? So we've come back down. We didn't create a lower low, but like I mentioned before, I imagined once we hit the new week opening gap, we would consolidate. And what have we done since then? We've consolidated, right? Clearly see that we have some shorts that are getting out, short covering. Some people are trying to go short still, and they're going to get squeezed out at some point. But yeah, that was a really vicious move. I'm glad we got to partake in some of it. Also, bullish breaker as well. That was enough for, gosh, that was almost a 70-point run there. Yeah, if you like this level of price action, go, appreciate that if you gave this video a like, and appreciate you for subscribing too. I'm so thankful to have you here each and every day, that I'm able to come online too. Let's see where we're at. So right now, we are at 934 subscribers. Wow. Thank you so much for subscribing. I really appreciate it. I know it doesn't like, I don't know if it means too much, but I appreciate to you, but it means a lot to me. So thank you very much. Greatly appreciate you being here, part of the journey, seeing the downs and the ups. And appreciate you guys making this a positive space too. I love seeing the chat there. I love seeing new traders, seasoned traders. I like seeing people with a different perspectives as well. Some people think I suck. Some people think I'm great. I'm neither. I'm really just learning right now. So let's see, RG. Notice how both consolidations on the hourly. So let's take a look at that here. Notice how both consolidations on the hourly had not had a Judas swing prior to the breakout. This way we had orders on both sides with the drop in London. There was also a buy side liquidity up top right there. And after taking out buy side liquidity, we had time distortion, which is up here, giving smart money time to accumulate shorts. Yeah, that's true. That's true, because this, when did this happen, right? Right at that, see, this is the 2 p.m. to 3 p.m. silver bullet time frame. But yeah, RG, that's a really, really good point. So New York Open was meant to slam out London's relative equal highs up here, and it did exactly that. And then once it did its job there, that was a big move. Time distortion, time distortion, time distortion. Pick up some shorts, pick up some shorts, major shorts, major shorts. So the key is that we don't have any Judas swings on either side. Well, I actually RG, I traded there was a slight Judas swing in the New York Open. So if you take a look at this right here, I actually traded this in the morning and I took out sell side liquidity, sell side liquidity, sell side liquidity. So it took these three out and then I took that long. So I did see that movement as a Judas swing. But on London side, I agree with you. High, we didn't get anywhere and then it just dropped. I think that's what RG is kind of alluding to, is that we have a high, we didn't get a high taken out here really, and then it just dropped. So yeah, that's true. We didn't take any low daily highs and lows. Yeah, I agree, RG. And that's really interesting. That it's interesting that RG pointed that out, right? So how the biggest, these big moves occurred when basically you had something like this occur. And then a lower high. Kind of like how we had here. And then a lower high. And then no time really, pretty much. Technically, this was like the last little bump up into this area here. This technically was the last little bump before we had a massive drop. Oh, even further. So that's roughly what RG was pointing out, is that instead of the typical, like, you know, low, high, higher, high, stops, return to mitigation, and then lower. What RG is pointing out is that we had, and it'll be easier for me to just use this as an example here. Let me make it a little more pronounced. So something like that. So both of these where we had a much higher high first, and then we failed to make a higher high, and then instantly really dropped super quick. ICT actually mentions that in the videos where he talks about his favorite entries. He would prefer seeing this higher high, seeing buy stops taken out first before heading lower. In this case, in London, you did not get a chance. Like if you missed this move here, you didn't get another chance to come in unless you were on a very low time frame. So those are really good things to note. I'm actually gonna screenshot that and put it in my journal real quick before I delete the lines there, because I like that concept a lot. Okay, this is what, Wednesday, 12/20/23. Nice, nice. Okay. So caught that. All right, great. Okay, let's see what's going on. Let me remove these lines from the screen here. We're not cluttering anything. Thanks, RG, for pointing that out. Appreciate you. Does look like we are destined to head down to that daily bullish order block down here. It's down at this area. Let's see what we got here. Okay, got some people calling. Okay, take care of that later. Man, that was a sick run. Time then price, huh? Time then price. Johnny is great. Thanks, Kirk. Appreciate you. I nominate this channel ICT Chartist of the Year. I'm nowhere near the people. There's people out there that are much better even than me, for sure. Especially people who have been out there for like 5 or 6 years. I'm sure they can see things with their back of their eyes shut, the back of their, in the back of their head. Me, it's still, right now, I mean, so far, my gut instinct, I've been at this enough. I've spent enough hours focused in on this, enough to know and see that my gut instinct generally is more correct than not. When I know I'm not correct, then I can flip the switch and make back what I saw. More so than even some of the chat window here, right? Like the other day, everyone was trying to go short, and I'm like, no, the draw on liquidity is still on the long side, and lo and behold, it ended doing that in the last few minutes of the day. And today we said that after this long drop, we would consolidate around the new week opening gap. I don't understand RG. I don't understand how many people could be so blind, not see that what ICT teaches is real. Yeah, it's, I think it's, especially if they're trying to shill a course and they start seeing people say, hey, like I've figured it out, I made it. I could see what price is doing, all because of ICT, and I don't need to buy your course anymore. It basically ruins their revenue stream, right? And so there's a whole bunch of people where you're either gonna say, hey, I don't understand ICT, or I'm not willing to spend the time to study it and look back at examples and kind of sear those into your brain. Kind of like how RG just said, hey, notice these examples of when it drops precipitously and very quickly, where you don't have a lot of chances to enter. looking for those types of things in the future is where how you set up your brain to know that, hey, the next time I see something like this set up, after we've gone up for days on end, the next time I start to see these types of things happen, I'm ready for it, you know? Look at dollar, 4-hour equal highs, consolidation. Let's take a look. Yeah, that is a nice relative equal high. What's the high there? 102, 629, 634, 102, 630. So there's definitely relative equal highs up there. That's going to get blasted. That will for sure get blasted at some point. And that's on a 4-hour chart too. I was expecting us to take this as a mitigation because we had this previous short-term low, but we've already touched that mitigation block for quite a few times. If we head up to take that out, well, we are headed lower, you know? And there's this sell side imbalance that's sitting up here, right? Now it doesn't, RG, something to note though, we don't have to necessarily attack those, right? Because look, we had relative equal highs up here back in November 16th and 17th. And we came up to a sell side imbalance and then dropped. We took those relative equal highs and then dropped. So I think we could possibly trade up into this SIBI potentially if we end up taking this high, or we just take that high and dollar kicks it as well. So there's a couple of options that we could possibly get here, but we're in such a discount. And the thing is I don't think we finished this market maker model yet. We are around this consolidation. We will. I can't imagine we head down to the 90s, but I guess it's possible. But technically, this whole market maker model could be fizzling out around this area here, and it technically could head as low as below this low there. So we'll have to see what happens there. Note those thoughts you just mentioned about recognizing patterns in the trade journal. I am doing that, absolutely. The yeah, I'm definitely journaling that, and yeah, the key is to go back and look through the journal. Journaling it once doesn't really help unless you go back and study the images and words that you remember from there. So always journal in a positive manner too, by the way. Even if you had some red trades, just journal as if you saw the right play occur, and here's what you saw. You saw it happen. Thankful you saw it happen. Thankful you capitalized on it. I actually do think, going back to the concept of demo, I do think that people should trade demo in the first half year or maybe even year of learning. That way you kind of numb yourself to price occurring before you feel the tension of real money being on the hook, right? I think that that's important for a demo. Let's see what we got here. All right, so we're closing in on the last few minutes of the day. We should see if we get a 350 to 4 o'clock, 410 type macro here. But we've been consolidating and doing nothing but consolidating around that new week opening gap. So about 9 seconds. We'll see if we make a run for this high here. All right, so 350. See if there's a macro that runs here. It takes us to past this 16,837.25 or not. Or if we just consolidate through the rest of the day. Doesn't look like it. So there you have it. Each of these accounts were traded separately. Each of these 4 accounts, I only traded 4 accounts today. And each of them was traded separately. Highest being about $430 today, lowest being 122. So slowly building it back, and we'll see if we can keep these going. It does look like we're just going to consolidate throughout the rest of the day, and we're going to close the stream probably, well, let's see. We might record the 4 o'clock, because keep in mind today, well, actually, no, today we are good. Yeah, today's Wednesday, right? Yeah. So there's nothing else today, so we might just close out. Man, that was an awesome short, though. Wow, so much fun. Thankful we noted that. Really thankful that we noted that. We saw that change. We saw the spooling price action. And you kind of get a feel for when that's going to happen as well. You see how price is booking. You see how the algorithm's just doing nothing but selling. And once you see a few of those, you kind of get the hang of like, oh, this is happening now. Let's get in on the A train now. Okay. I'll close down some of these other things over here. So, generally, depending on, since we had a large range day today and we're close to the new week opening gap, tomorrow morning session, if London does nothing but consolidate, keep in mind tomorrow morning, Thursday morning, we have unemployment claims. So it's going to be a wild ride, especially since we have seen such a large drop today. 060, 960, 860. So over 200 points down. Unemployment claims is going to be a wild ride. I don't know what's going to happen at 8:30, but it's going to be, we're going to reach for something. We just need to figure out what that something is. So about 6 minutes until the end of the day. Um, anyone in the audience have any questions? Anyone in the audience curious about what we saw or why we saw it? Anyone have any questions on ICT or trading, prop firms, whatever? Just drop it in the chat if you do. Let's see, Kirk, what country are you heading for vacation? We'll be heading to Amsterdam, Netherlands. Netherlands is a fun place, super chill. Josh H, I gave up some profits trying to trade a bounce. It's not bouncing. Yeah, maybe it's not bouncing yet. Josh, sorry to hear that. We're in quite a bit of premium for the past 1, 2, 3, 4, 5, roughly 6, 7, 8. 8 out of the past 9 days we've been in a premium, and God forbid the weeks that we've been in premium. So it's been a wild ride. Now, if we start to you want to be careful on those days where we have spooling kind of days, because once it's done, once it's at its terminus, it almost always consolidates, because then there's people getting out of their shorts, there's people trying to buy the lows for a bounce, there's people trying to get out of shorts and sell out of their last bit of shorts. So yeah, it can be tough, Josh, but if you can get it earlier in the run, and you can identify a clear draw on liquidity, then you have a little bit higher percentage chance, higher probability. Any one of the trades that I took could have gone up against me as well. So don't feel, as long as you recognize that, hey, maybe it wasn't the best time to stay in a long trade at the end of a giant sell-off, then you'll learn, over time. You'll see that happen. Kirk, my wife did her residency. Oh, nice. Yeah. Yeah, the Netherlands is a fantastic place. I love the people there. The food's great. The sites are great. And people walk around outside too. We're not, oh boy, we went down. We made it, folks. What was I saying? 16774, that bullish order block on the daily. We just tagged that at 3:58 p.m. So 4-hour chart, we traded down through a few bullish order blocks here down to this daily. So higher time frame items take precedence, right? So if we looked at the weekly, for example, so the weekly we see has been up 1, 2, how many weeks? 1, 2, 3, 4, 5, 6, 7 green weeks in a row. So us heading down might feel like a lot, but it's really not that much. On the daily, we've reached a bullish order block here. On the hourly, we can see we reached a bullish order block. 358. So we've hit right at 16,774 exact, right at the end of the day. And so that, my friends, is it. I'll have to change these values probably tomorrow morning. I think. Hey, RG, greetings from Belgium. Awesome, awesome. Good to see you. Isn't it pretty late there for you though, RG? Is it it's 4 o'clock p.m. Eastern here. Is it 10 o'clock p.m. Belgian time? 6 or 7 hours, maybe 10, 11, maybe 11 o'clock p.m. Oh, it's 22. Okay. So it's 10 p.m. there. 10 o'clock p.m. Belgian time. Yeah, I won't I'm only online during this December month because I can take some paid time off to trade. Once the new year starts, I won't be able to be like visually like this box here where you see my face. I can't really be online trading because I'm, working 9 to 5. So I need to stay off the camera during the daytime when I'm recording price action. Um, and whoa, my goodness, we are still going. 4 o'clock already. I wonder if tomorrow we gap down to that 693. I'm curious if we gap down tomorrow. I guess we'll find out, but these are some pretty large sell-offs here. Let's see, almost everything is red across the board. That was a pretty large sell-off across the board. If the camera stays off, please improve your charting. We need a cleaner layout and your thoughts on each session written out. Will be otherwise tough to follow. Yeah, good call. I'll try to keep these here, but I think what I'll have to do is maybe I'll have to, during the session, I'll need to use the 1-minute chart to kind of add text here. If I see relative equal highs, I can maybe add that, but then it starts to get a little cluttered. Maybe I'll have to add the annotations only on the 1-minute time frame so they don't go across all time frames here. I think I can remove this now. Yeah, I'll need to think about that. Note them on a sideline, but note them on the chart. Don't note them on the chart. Yeah, the higher time frame ones, like, the problem is if we don't note them on the chart, then we don't have that visual cue, and I can't. While I could think like, hey, 1789, I wouldn't be able to see that on this. I'd be able to think, oh, okay, it's like somewhere in the middle of 1750 and 17100, but I wouldn't know exactly where it's at, right? And so I want to keep those higher time frame levels on my chart. If the target gets hit, you can mark them in the notes, but the chart won't get cluttered. Yeah, I think I'm gonna have to graduate to that RG. I don't think I'm good enough yet to do that. So I kind of think of it as training wheels for myself, since I'm, a year and, let's see, October, November, December, so a year and 2 months into my trading, like ICT trading journey. So yeah, I think that that's gonna be. I'll have to make use of Notepad a little bit better, and I'll have to be able to like use this. Let me see where we are. I'm gonna test this out here. So something like this where like 10:01 a.m. Watch price tick buy side liquidity and target lower to something like that. Like I'll have to like maybe make use of like times of when a thought comes into play and what the thought is, so that I can kind of then kind of like update it to like 10:30 a.m. Note minus order block at, you know, I don't know, 17. You know, something like that. I'll have to play around with it. I think that's probably the only way. Because technically, you know, I'm not trading. I'm recording price action during the day, right? So I definitely want to make sure I'm respectful of my main employer. So I want to make sure that, you know, while we're learning this, we're able to keep me employed, right? It is tough. Maybe start with using the monthly chart without any lines and keep the lines on all the other charts. Oh, okay. So like take out my monthly level, key levels there. Yeah. The monthly intermediate term highs, though, are the really important ones. Yeah, I'll have to see. It'll take some time, honestly, RG, before I get to that level. I know ICT doesn't use any of them. Oh, 1 minute chart. Sorry. Yeah, that's true. Yeah. I see what you mean. Using the 1 minute chart without any lines and keep the lines. So what sucks about NinjaTrader is that you only have the option to either put it on the original time frame chart, or you have the option to put it on all charts. It either propagates to all charts or none of the charts. So Ninja doesn't have the option to say, hey, don't apply these to the 1 minute chart. Although I would prefer that, obviously, but we of course can't. We kind of don't have them. Why don't you use TradingView, by the way? I have TradingView, but I use Rhythmic. I just enjoy Rhythmic. I don't know. TradingView is not bad. I have TradingView here as well. I don't use Tradeovate to trade futures. I might in the future, but I just don't yet. So I definitely do have, you know, things like NASDAQ, and I can still walk my way through different time frames, obviously. Even the lower time frames if you need it. But yeah, I don't use it just because I've grown accustomed to Rhythmic. TradingView, maybe like later on, maybe when I take some payouts and start trading with AMP futures, maybe then I'll be able to use TradingView. Yeah, I know. RG says he loves TradingView. It's good. It's good. I have nothing against TradingView. I use it. I use it for dollar. I use it for DXY, and it's great for mobile as well. I mean, Rhythmic for mobile sucks. But TradingView is pretty nice. I just got to use NinjaTrader. Got used to NinjaTrader. Please wait till we both take payouts before TradingView. Kirk, I still I haven't forgotten yet. I do plan on still making a video on like how to set up charts the way that, or how to set up Ninja the way that I set it up. And then I'll walk through all my settings and stuff like that, any of my fibs, any of my lines. I'll make sure I record a video for that and walk through each and every line, because like I use for example, let's see, it'll be easier to use a expanded chart here. But like for example, like I'll walk through how for my monthly charts I use a width 3 of cornflower blue, and then for buy side liquidity, and then for weekly buy side liquidity I might use cornflower blue but width of 2, and then for daily, if I have like a daily buy side liquidity here, I don't know where's an example, but that's a weekly. Where's a daily buy side liquidity? Trying to look for one here. Like, here's one here. A daily's got a 1 pixel, but cornflower blue, but on the sell side liquidity, daily's 1 pixel dark red. I'll do a video running through all of that, my Fibonacci settings. I might also give people the sessions, the NinjaTrader script that allows you to set indicators like this. We can set the time frame and set it to be blue, green, red, whatever color you want really. And then like kind of like how I set up the ICT silver bullet zones too, so that you can get a clear visual indication of when something's happening. So yeah, I'll do a video on that too, in case anybody wants to mimic the way I set up NinjaTrader. You don't have to, obviously, but I'll keep that in mind. And then I'll keep in mind also the usage of text box with timestamps of when and what candle I was thinking about when I type out something here. I think that might help out sequence the thoughts of people a little bit sooner. Yeah. Let's see. Yeah, I think those are all great ideas. Yeah, absolutely. I'm gonna need to RG. I'm gonna have to practice. I don't know, man. It's gonna take a while before I can get used to writing. Get used to how ICT does it with just writing down and looking for key levels, because I'm not that good yet. So, like I wouldn't be able to eyeball something like an hourly chart going down to the top of this imbalance here, or the top of this bullish order block, for example, the open of this order block. I wouldn't have been able to eyeball that as easily. Same with the new week opening gap. I mean, I know it looks like two blurred lines here, but I wouldn't have been able to think, oh, okay, well, I see it going down there, but I don't have any lines indicating that. I think it's approximately here. Let me just, market sell or market buy. I technically could do that, but it's just a little easier for me with the help of these key levels there. And then any orange stuff is my weekly levels. Any purple is my daily levels. And that's really it. I don't go any lower than daily. If I have hourlies, then I'll just use a typical buy side or sell side, depending on what I see there. Okay, let's see what we got here. Let's go back to the hourly. All right, so this has been referred to. It might come back to refer to that at some point in the future, but likely it'll refer to this one up here instead. What do we have left? So this rejection block down here coming up soon. If we continue lower, we have a lot of sell side liquidity here. Lots of stuff waiting, just waiting for us. And I think these are old. These are also old. Cool. All right. Let's see. think that's it. Let's see, has price done anything since? No, it's just pretty much hovered around that area. Cool. Well, I think, oh, I didn't realize I didn't come back on screen yet. Well, yeah, I think that today was a pretty good day. We ended up with a little over 1,000 today total across the different accounts. So I have a couple of accounts that are in the green, some that are just a little bit in the red. So we'll continue to build. Hopefully tomorrow we'll build a little bit, but I'm not expecting too much in tomorrow morning's AM session because we had such a big range day today. But of course, with unemployment claims, there's a good chance that a gap is going to form come 8:30 a.m. So we'll watch out for that. I will not be positioned before that because we don't know where unemployment claims can take us. But after unemployment claims happens, we'll see where the next draw on liquidity is running, and then we'll take it there. All right. Hopefully that was helpful today. Hope that was insightful. Appreciate all the, let me take a look and see what we've got here. Let's see. We have 13 likes, so thank you very much, folks, on the channel. I appreciate it. Appreciate the love. Appreciate the subscribers as well. Like I see somebody just subscribed too, so thank you. Yeah. Any questions? So right now we're just shooting the shit. Just enjoying the time here. I'm gonna probably close up soon if there's no other questions here, but yeah, just really, really excited here. Had a really fun day, so maybe I'll try to grab a few Apex. Let's see, when is that? I think they're doing live pass in 1 day challenges again, so maybe I'll check those out and see if I can get a couple passed again. I think there's only, you pass in 1 day, so I think that's reasonable. I'll test it out a little bit. Let's see what this is. Oh, drug reps. Okay, whatever. All right. So today's Wednesday. So we have a high of week on Wednesday. So let's see if Thursday we end up coming down to pick up some sell side liquidity, and if we head higher or not. On the 4 hour, we actually haven't broken an intermediate term high, or sorry, an intermediate term low. We have short-term lows that we've broken through, but there's not been one intermediate term low yet. Now, there is a definition of an intermediate term low being surrounded by two short-term lows to its right and left side. But there's also another intermediate term low, which is formed from a fair value gap. I need to go back and look at what that second definition is for sure, because there are two things that ICT defines intermediate term lows by, and I can't remember exactly what the other one is. RG, keep up the good work. Bye. Hey, have a good night, RG. Hope you have a good sleep. We'll catch up tomorrow sometime, okay? Thanks for coming in. Appreciate having you here, brother. Yeah, I guess it's nighttime for many people over in Europe. Definitely nighttime there. So yeah, note the new day opening gap on Wednesday, December 13th. The new day opening gap on the 13th. Let's take a look on a lower time frame. Okay. I actually don't see a new day opening gap on Wednesday, December 13th. $17. So this closed at 16,596 and we opened at 16,603. That's a really small. Use the hourly to find the new day opening gap. Yeah, there's no new day opening gap there, brother. That's a really tiny new day opening gap. You talking about this volume imbalance up here on the 17 and 22? Oh wait, this is that 4 hour, my bad. So from the 12th to the 13th. 17, 19. 17, 19. Yeah, there's really no new day opening gap there. 16, 762. To a low, 16,777 high. Yeah, I'm not sure what new day. Oh, am I? Well, the 12th to 13th. So the 12th to 13th, it shifts. So the new day opening gap is typically the 1700 close of the 12th, and then you go to the 1900 open of the third. Well, it is the 12th. It's basically 6 to 7 p.m. right on the next trading day, basically. It counts from 6 p.m. from the 12th to the 13th. If maybe you're looking at, are you looking at real-time hours? 13th and 14th, the next one. 16,774. Yeah, TradingView's data might be a little bit different, but that's okay. Let's see. Yeah, I think our data is probably a little bit. There we go, that down candle. 17 to 18 o'clock, correct? Yeah, yeah. Is the new day opening gap. Okay. Close is at 16,761 for me. The open is at 16,774. Oh, I see what you mean. I see what you mean. I see what you mean. Yeah. I don't know if I would have referred to that though. New day opening gaps. Typically, ICT says you don't refer to them after what, three days or so. I thought ICT doesn't refer to those after 3 or 4 days. Well, I guess this would be right at the 1, 2, 3, 4 days mark. Um, but yeah, there's quite a few confluences that were there as well. But yeah, the the new day opening gap was there. There was a daily order block that was there as well. Oops. The daily bullish order block that was there as well. There's a couple of different confluences. Oh, I see. After the week is done. So that would have been last week's. Okay. Yeah, I don't think I would have had that on my calendar or on my charts, but yeah, that is really interesting though. It's a good, if it's a big one though, the chance of IPTA referring back to it is higher. So I see. I see what you mean. Interesting. No, I don't think I would have seen that. The new week opening gaps are already like, they already keep my charts kind of cluttered if I keep too many of them on the chart at one time. If I do the new day opening gaps, my goodness, my charts look horrible if I have those on because I can't toggle them, right? So, but yeah, could be coincidence, but I mean, it worked out. I mean, it would serve as another confluence, right? It would definitely serve as another confluence if you had that on your charts, but I would have missed that. I would have probably been seeing the daily bullish order block instead, but that's okay. Everyone sees different things, though. Yeah. Kirktown, just you and me now, Johnny. Last man standing. Absolutely. Well, it says there's still like 13 people watching this. I don't know where. I don't know where that's awesome. Say hello. Hopefully, where are people from? Hopefully, people are still listening in. Let's see what we got here. Cool. Well, it doesn't look like really much is happening here. And I think that is it. Any chance you see on hourly? This is a market maker buy model. Yeah. I would say it's a market maker sell model for sure, but there were smaller buy models within that on lower time frames. I think you have to go out a little bit further to see that it's a market maker buy model. I think you probably have to go out to like a daily. I might not have enough data here. See if I can give myself more data on the daily. So you kind of see on the daily chart how, well, this looks kind of cluttered right here, but you see how we have this segment here that's still outstanding. I still think that we could be part of a market maker buy model. Yeah, we could still be in the larger market maker buy model, but that's on the daily that I can see that. I don't know about the hourly. The spike on December 14th, 13 o'clock is low. Yeah, we still, like, to be fair, let's see, what's the lows here? 16,756.50, 16,757.25. So we actually haven't gotten, we have not gotten and created a lower intermediate term low yet. So we still have plenty of time. We still have plenty of time before we head lower. If we start to drop below this daily bullish order block though, and we do not head any higher into the weekly sell side imbalance, I think that this could be the beginning of a consolidation up near a weekly level, and then come January we drop is my thoughts. So we'll see, like mid-January-ish, I would say, when we have a lot of expiries. We'll have to see if price drops, or because it's an election year, if they decide to just say, oh, everything's good, we'll start easing. I mean, if that happens, I mean, and it's not actually structurally sound, like the markets aren't healthy, then that's when we start getting our short pants on, and we look for the market maker sell model to begin. And that will be a very fascinating time. That's going to be a beautiful time, because there's a huge, let me bring my daily chart over here. So this is the daily chart, right? So we're at the tail end of a market maker buy model, right? So once we finish this and we have a blow off, like I would prefer us finishing it with a blow off top, because then that would allow us to provide a second stage here and an original accumulation, like original consolidation, for us to head even lower. So this would be like in the coming year, I imagine either we blow off top and keep going, or we see the second part of January serve as part of the initial portion of a market maker sell model. So that's what I'm thinking. I don't know if it's going to happen, but we shall see. So I think with that, yeah, good calls here. Let's see if there's any other questions here. Awesome to get to talk ICT concepts with everyone, though. Really, it's a pleasure. It's my pleasure to be able to speak with y'all. So, so we'll see. We'll see if we get some daily moves down below daily short-term lows. Then that will signify a true shift in market structure. We'll have to look at IPTA as well as we enter January and see what kind of structures form. So far on IPTA, and let me pull that back so we can take a look. So far on our IPTA data ranges, we can kind of see that December has happened. All of our previous levels have been projected out already and traded to. So now there's levels to the downside to be attacked next. There are some levels to be attacked on the upside, and as we expand out of our IPTA data range, we can aim to either mitigate and head higher, or mitigate or consolidate and then head lower towards distribution. So we'll change that again as we reach the month of January. I still need to go back and look how to properly use IPTA data ranges. I need to really study that deeper. I'm hoping the charter content provides a little bit more detail into that. But yeah, we'll see. I can't wait to understand them a little bit better. So yeah. All right. I think with that, it's 4:30 now. I'm going to go drink some more water. I'm parched. We had a fantastic day, and to those that are here still, thank you so much for the 13 folks who are still here. Appreciate having you here. and it's been my pleasure to get to stream today with you and chat with you. We'll be on. I think I like. You know what? I think I enjoy doing morning prep instead of evening prep. I've been thinking about this for a while. Uh, I think that prepping before the live, like prepping in the early morning before the live stream, I think that you can you really benefit from the Asia and London range. So, but like if I think about when I come on in the evening time, one, there's only a handful of folks that are able to join. Yes, it gives me some more views and whatnot, but I don't really care. I end up coming in the next morning and looking to see what Asia and London did anyways. So I'm thinking it might be I need to come up with a schedule that's a little bit better. Like maybe we do the Sunday night prep and that would be the major nighttime prep. That way people can actually go to sleep and wake up early in the morning and come back and prep, right? Come back before the New York session, prep for the day. Because I was thinking about this and I was just like the prep that we do in the morning, or sorry, that we do in the evening each night, it's not anything groundbreaking because we don't have the information that we need to as like we do in the morning, like we do after London and Asia session, right? So I'm thinking instead of doing nighttime sessions, I may just then who's gonna tell me about the big bad market bedtime story? Yeah, I don't know. We'll see. um we'll see. I need to think about it in the new year um because if I'm gonna have time to do this, I need to be able to get good rest and I need to be able to do good at my job as well as do good at morning prep. So that means getting on at like, 6, 7 in the morning, prepping for the day. Even if I can't take any trades, at least prepping for the morning fresh is going to keep things fresh in your brain anyways. And I think that that'll probably be more helpful than prepping at night when I'm half falling asleep. So I'm thinking that I'll start to do mornings only. I actually got to sleep pretty well last night, and every single time I sleep well, I perform much better. So I think that'll be better for the stream overall. And I think that that'll give us even more information as we think about and formulate where we think price can go. Asia and London sessions can give us an idea. So I'm thinking I'm gonna stop the evening sessions for now so that people can go rest, sleep. I can go rest and sleep too. Yeah, morning prep. Thank you, Kirk. Maybe a 5-minute video where you explain what happened the last day and what the next day is sufficient. Yeah, we could. Yeah, that's a good point. I could just pop on some yeah, I guess we could do a video. Yeah, could do a video. RG, that's a good call. As maybe I could just record a video super quick. It would be as if I'm live streaming anyways. I'm just not going live stream. But maybe I could post a video on post that at night and then come back on live stream, talk through it in the morning. Getting it done in 5 minutes is gonna be tough, I think. Typically those sessions end up going longer than 5 minutes, but yeah, I'll think about these like over the course of break, because come Friday of this year, or Friday the 22nd, I won't be able to be here. I'm not gonna be around to trade, so I'll be taking the rest of the year off. I won't take any more trades. So thanks for the suggestions though, RG, Kirk. I'll play around with it in terms of what I can work into the schedule, and then I'll see. I'll test and see what I can do with the schedule, and if it becomes like overbearing, then I'll let you all know. At the very least, for sure, I'll be doing the morning ones, and then I'll also recap the day. Maybe like RG says, I'll do a quick recap, but I'm not gonna go live for it. I'll probably just do a quick recap from the day and post that maybe at the same time in case anybody wants to watch that. Otherwise, we'll always have the morning time where I'll try to get on. I'll try to go to sleep earlier so I can wake up earlier and talk through price action before the day starts. So that'll be the goal coming into the new year. So there will be no prep this evening though. I'm gonna try it out once more, try to get better sleep, and then focus in on the morning prep. See if I can get in at 6 or 7 in the morning, get up, make sure I'm up and at them, so that we can get a sense of where price could go. So that's probably the direction we're gonna go for now. All right. So I think that's it though. That's all that's happening today. There's nothing else happening on price right now, as you can see. So I think we're going to go ahead and close the stream down for today. Thank you very much for coming, everybody, and we'll catch up tomorrow morning bright and early. I will aim to get in by 7 a.m., but as you know, like sometimes the alarm doesn't go off. I'll just try to be on. It will be on, but definitely before market open. Just, I'll aim for 7 in the morning. If I can get on earlier, great. Always, if I get on too super early, feel free to ask me to recap something. No problem at all. I'm very happy to do so. And yeah, we'll catch up soon. We will catch up soon. All right. Have a good night. Good seeing you, everybody. And we'll talk soon. See ya.